doesn't look at the negative. It just says I'll miss trades. So the suggestions have to be positive in the first person. Whatever, it's simple techniques to use, and we've got those all set for whether it's patience or getting over fear, whatever. But you can try to do it on your own. I think you're crazy for it, because for what we charge, you might as well use our stuff. But I'm just saying to you that things that you're doing over and over again don't have to be like that. You can start to you can change your subconscious patterns and change that neural net by feeding the new neural pathways with behaviors that serve you to build that. And it doesn't take a lot. It only takes 8 or 10 repetitions of a 7-minute mental training session even. That's what we do, and you have that neural pathway set. You see it immediately. In fact, people tell us that the patience that they've derived from our sessions in patience also help them to being patient in their relationship with their kids. So this is something that, in fact, in our site we have sessions for all your life, everything from better sex to better golf and tennis, and we have sessions like that for you at the Disciplined Trader, because about 2 years ago I got so many of these kinds of things that when you work with your mind and as a trader, it helps you in other areas of your life. I just decided to give you everything we had that we've been doing over the years, whether it pertained to trading or not. So I'm drilling on this because I'm going to urge you to do something to train your subconscious mind, because 95% of the time that's where the decisions are being made, and so you need to change those tapes in order to have them carry the beliefs that serve you, so that when your subconscious mind is occupied thinking of everything else and defaults to your subconscious mind, which is 95% of the time, then you're going to make the decisions that serve you. Okay, I hope I got my point across. All right. You need to journal before you trade, and you need to journal after you trade. Okay, and I'm not talking about journaling every trade that you make and how you do. You can do that. I consider that the least important part of journaling. I'm writing down things as I'm trading. If something happens, good or bad, I'm congratulating myself. I'm always giving gratitude to myself. It's another area that we would probably need to talk about in a different place, but about being grateful, so that whatever, we'll talk about in a different place. Talk about journaling. I want to give you, if you get nothing from this, well, I think the most important thing is the subconscious training. So if you get nothing from it, do that. But the journaling before trading and after trading, I want to give you the technique right now. I give this almost in every lecture on when I talk about the mental and emotional issues, because it's really important. And I got to give it 3 or 4. Even if you've heard this before, you're probably still not doing it. If you are, congratulations. If you're not, you got to put it in your subconscious mind to make this part of the habit, because journaling is where you get real with yourself. It's where the honesty comes out. And there isn't a trader on this list, whether it's Busby or Bigelow or anybody, that doesn't journal, because we all realize that you need to get real with who you are, and you need to support yourself through journaling. It's not a place where you beat yourself up. It's a place where you adjust. I don't even call it correcting myself, because as my wife will tell me, I don't like to be corrected. Maybe it's all guys that don't like to be corrected. I don't know. I do. I'm getting better at it, and I work on it. But so my wife, we talk to each other in cushiony terms, so that we accept the corrections and the adjustments. I'm going to give it to you the way here's how I journal. And first I journal. I'm going to give it to you at the end of the day so that you can understand the flow. At the end of your trading day, okay, whether if you're trading the E-mini S&P's 415, the market's over, you take out your journal. And I want it to be a nice journal. I want it to be a journal with a leather cover, something that you can respect, because this is you. Nobody's going to see this but you. This is where, again, where you're honest with yourself. Here's what you say. Always start out with a positive statement. So that's step 1. Today I was the stop king. I'm thinking about things that I've written recently. Today I was the stop king, okay, which meant I put in all of my stops correctly and adjusted everything great. Okay, but so I always think of something positive to say about my trading day. Okay, if you can't think of anything and you've been totally horrible that trading day, then put in, today I showed up for trading. I showed up for my my career in trading, and I came with positive energy. You would think of something, but always start off with positive. Then today, and then here is the next sentence is where you put in your mistake. Say, today I did something that's unlike me. Okay, either unlike me. I use unnorman-like a lot. You can use my name or your own name. Today I was beside myself. Today I must have been possessed by a spirit. I always take myself off the hook for direct blame. Okay, today I did an unnorman-like thing. I missed a trade because I hesitated to pull the trigger when my trading plan gave me the signal. Okay, so start off with a positive statement, then the next sentence starts with, today I did something that was I was beside myself, it was an unnormal-like thing, whatever that, I gave you those permutations. So then you state what happened and a reason for it to happen. Today I missed the trade because today I missed a trade because I took my mind off the screen. By the time I got back, the trade had gone off and I missed it. I lost my focus, and that's what happened. Okay, then so you want to state the problem and then why it happened, and then a corrective statement. Tomorrow I will be tomorrow I will take every trade as soon as my trading plan tells me to. Tomorrow I'll be a tiger and pounce on every trade when my trading plan tells me to. Okay, so positive statement, take yourself off the hook, I'm Norman-like, beside myself, today I did, and then explain what you did clearly, why you did it, and then a commitment statement, tomorrow I will be the trading tiger. I will jump on every trade when my trading plan tells me to. Okay, and then you end with another positive statement. I always end with, I'm a wise and disciplined trader, and you can steal this from me. I'm a wise and disciplined trader, because I think I think wisdom is even better than smart. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. So you got a nice positive momentum sandwich in there. You screwed up during the day, hey, but you just admitted it. You took responsibility. Hey, it's unlike me. I did it, but it's not like me. You didn't have to say you're sorry. So you didn't have to, you're admitting it, but you're not really criticizing yourself that much. You're putting it in the way where it's easy for you to write, and you're not beating yourself up. I'm not saying I screwed up today. I can't believe I did it again. None of that goes in the journal. When you read your journal, it's all about exposing yourself as who you are, what you're doing at the moment, and why you did it. But it's okay because you're an improvement machine, and all you're into is getting better and better. You don't look back; you look forward. It was unlike me. I'm a new person. Boom. I'm a wise and disciplined trader. So that's it. Okay, positive statement. Unlike me. Thing that you did, reason why, and then commitment to change the next day, and then I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Okay, so I just gave it to you. You now have no excuse not to journal. And what I just told you is it only takes you 10 minutes to do. If that much. Okay, I know guys that journal for an hour. Ray Barrows, who runs $1 billion fund down in the Far East, one of the biggest ones out there. This guy journals an hour a day in our course. I did a whole interview with him, and you can hear me gasping in the interview when he said an hour a day. I mean, heck, what can you write for an hour? This guy says that when it's you against you in the market. It's not the market against you or you against the market. People are fighting the market instead of improving themselves. That's the big deal. That's the big problem, and he recognizes it, and because he recognizes it with the fervor and the commitment that he does, journaling. And now this guy, that's why this guy runs $1 billion fund and you and I don't, because he journals for an hour. I mean, I don't know, but I'm just telling you, guys that are doing it in the business are zooming in on journaling. Okay, now I'll give you the other half now, and it's quick. In the beginning of the day, before you do your I'd like to see you doing a subconscious training before you start your day. Then I want to see you hit your journaling, and your journaling will say something like, starts off with a commitment sentence from the day before. Today I am a trading tiger. I take every trade my trading plan gives me without hesitation. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Now, I didn't say I'm going to make $1,000 today. I didn't say I'm going to. You come to the table with positive conviction, the money will come. You have a good trading plan, you have proper risk and money management, and any of these guys, Fausto, everybody will tell you the same thing. But I'm going to scream it at you. Have a trading plan that's valid, that's solid. Doesn't even have to be great, solid. But I want you to have a great risk and money management scheme. And then it's all about the commitment to following it. And these two steps, using and utilizing the science behind your subconscious mind and how it works and how it's not serving you now, and knowing that it's not your fault with the subconscious. All the mistakes that you've made in the past, it's not your fault. That's great. I've just forgiven you. It's like Yom Kippur to Jews. It's all, we get forgiven for all our sins. Starts, that's the only high holiday everybody makes in the Jewish religion, because everybody goes, whether they reform or they stop going, they still, show up because they want that. I'm doing that, and I'm I'm not higher than a human being, but I'm saying to you right now, from here on in, it's not your fault because you didn't know about the subconscious mind. That's the good news. The problem from here on in, or the continued good news, is now you know what to do. But it's on you from here on in. You keep making those bad mistakes. It's not your fault. It's not the market's fault. It's not Fausto's fault or Busby or Bigelow. It's not any of our faults. It's your fault. It's your fault because you now understand how the subconscious mind works, and that you can do something about it by dropping yourself into an alpha brainwave state and submitting the positive suggestions to you in a simple voice that serves you as a trader. It is science. So stop putting it in the occult section of the bookstore. Okay, this is what things that sounded crazy are now science. I mean, look at the revolution we're having right now. And I mean, they're 10 years away from taking your blood in the hospital and doing your genome map and then printing you out a bioidentical kidney and putting it into you. No more lists to wait on. I mean, we are living in a tremendous time. This is part of it. This is stuff that we can use, and we do use, and it's turning traders' lives around. Okay, so you know now how to journal in the beginning of the day as a recommitment of what you did the night before, and now you're going forward with analyzing but taking yourself off the hook the way I told you. I do a whole presentation on journaling, but I wanted to give you that important part of it. All right, I like to have you, in the beginning when you're training, you do your I said it takes 8 or 10 times. So you do it 3 or 4 times. Somehow you look like somehow you seem to be making the same mistake. Well, it's good to have. They used to have a rubber band where you pulled, something. In the case of a trader, you get the signal to take a trade, and you pull the rubber band, and then you take the trade. That pain would remind you.
I am a wise and disciplined trader, and I do the things that a wise and disciplined trader does.
Okay, I just hit a button. It looks just like the button there. It's called Flashpoint. We sell it on our site. I'm not, but you can make your own recording if you want. But this is like the easy button. And so whenever I get close to, I see that when the lines are going to cross and moving averages, and I know that I'm going to get the signal. When I set up, I hit this, and this is my focus button. I know I'm ready to go.
I am a wise and disciplined trader, and I do the things that a wise and disciplined trader does.
Okay, so I use that sometimes. I'm always using vehicles to help me to follow my trading plan to the T. So I use the flash, whether you use a rubber band or a flashpoint button, do anything you want, but I'm saying to you, do something in the beginning as you're training, because it doesn't take long for these mental states to become yours, and your subconscious and the right behaviors to be recorded in your subconscious mind. Remember, the subconscious mind is only a tape recorder, okay? And the mistakes that you're making are based on you following the wrong recorder for the stimulus. You just need to make some new tapes for that same stimulus, because once you do, the old neural net becomes the minority neural net, and the new one becomes dominant. Okay, so it's like night follows day. Okay, so I think I've gone through all of this. Now I want to hopefully, that's a lot of my presentation there. I wanted to hit you hard on the journaling, and I wanted to hit you really hard on the subconscious training, because if you're thinking that it's again, I'm not going to go through it again. I feel like I'm yelling at you. Do it. Come on, man. Do it. All right. Here's a gift, and this is available on Android and the iPhone. This is something that keeps you in the positive momentum. Have everybody in your family download this. If you have kids, have them download this. You download this. Once you start doing this, it's like a drug, a good drug. Here's what it is. It's called WinStreak, and it's a free app by a guy who I pay a lot of money to, who trains me as a entrepreneur. The guy's name is Dan Sullivan with Strategic Coach. And if you look up WinStreak or search for it and download this, what you do is you write 3 wins for the day. It's a very simple app. You write 3 wins for the day. In this case, in this example, I drank 3 liters of water. I finished reading a novel for a book club. I found a reliable contractor to start the next phase of office renovations. Okay, for us, that could be today's wins. You know, today I had, I had 50% winners, but the winners were bigger than the losers, so I made money. I corrected my my problem of getting in on when my trading plan gave me the signal, so I corrected that today, and I exercised like I was supposed to. So I always throw a physical. I believe that you got to stay physically fit for traders. I'm gonna do a course, I think, for physical fitness for traders, and because you have to have that positive energy, and the positive energy flows from you as the human structure. So I always include something that's positive about me and my physical and mental self. The other two are related to trading. And then tomorrow's, I do this at night. Okay, do this at night before I go to sleep. And tomorrow's wins. So in this particular case, I'm making notes for speaking engagement. I'm gonna a great dinner date with G. I guess that's Lady Gaga. In that example, and the 8K run in the morning. So think of tomorrow, and sometimes it comes straight out of my journal. Tomorrow I'm going to be following my trades to a T. If it was an example that I get, tomorrow I take every trade my trading plan gives me without hesitation. Tomorrow I'm having a great, now it looks a little bit different on Saturday and Sunday, but you want to do it every day. And so what happens automatically tomorrow? So then, and you keep doing this day after day. And you're going to find that that the fact that you're honoring yourself and you're respecting yourself and the wins, you're showing gratitude for today's wins, and then projecting wins for tomorrow. This is an exercise that's like a ball rolling. So try this. I really think it's a simple thing. Kids really like this. In the class that I was in, this actually came out about a year ago, but a lot of the guys, it's really a mastermind of high-end entrepreneurs. I don't know what I'm doing. I just made it in there, and one guy stood up and said, "Hey, WinStreak's working for me, but my kids really like it." So this is great, and you really can apply this. Again, you want to get that positive momentum. So I hope I hope all of that's good. I want to take just 2 or 3 minutes and show you what we're doing at the Discipline Trader to help support that subconscious training stuff and the journaling things and so on. This is the logged in. But when you log into the Discipline Trader, here's what you get. And there's if you go to thedisciplinetrader.com/community, the Disciplined Trader /community. I'm going to show you that at the end. But we've got a deal here, $29. So that you're going to be able to get involved in the Disciplined Trader. So I want you in. I lowered the price because I want you in this. I want you to work with the science of the subconscious mind. I don't want you to give yourself. I don't want your conscious mind to start babbling to yourself that this stuff doesn't ever work. I never met anybody that did. While your subconscious mind is controlling your life in a negative way. Why do that? This is science. Okay, so this is the site that we have, and what you're looking at is the welcome page. It's the basic series, the mastery kit online. This all used to be a physical kit we sold for $2,000. Now at $29 a month, you can have this, all of the content in the mastery kit right online for your convenience. The core module is the module that contains all of the mental and emotional trainings. So we put in the basic series wasn't really there. We were training people so well to follow their trading plans, and some of them were coming back telling me that they were losing. They were following their trading plan and losing. The only thing is, if you have a lousy trading plan, being emotionally and physically and fit to follow your trading plan is not going to help you. It's only going to have you lose faster. So the basic series became something that we put together, how to build a responsible trading plan, the rudiments, risk and money management. It's a series of 4-hour presentations by experts in the field, how to build a responsible trading plan, the risk and money management, framing your trading as a business, which is important, and we do a whole hour on journaling. So all of that is very, very important. And then you get to the mastery kit. So these are the basics. The bonus materials, I won't go through that here. If you'll probably be getting in and seeing this. I mean, what we're at. For the price of $29, I'm sure you're going to want to see this, but again, that's up to you. But here's a typical core module. And again, there's 6 of these. The first, as you see on the top, you'll see the introduction where there's a video that tells you how to move through the material. There's always downloads. You'll see down here a trading journal primer and a special report that I did on how to pull the trigger without hesitation. But this is all conscious stuff. And what it really is supposed to do is really impress you to do the darn subconscious trainings. So the subconscious training right here is you'll see the subconscious training, the strength to pull the trigger. There's also affirmations, which is kind of a 1/10 potent subconscious training, but a lot of people like to listen to it in their car. It's just a voice with the same suggestions that's in the subconscious training. You get in the affirmations, just the voice without the relaxation in the front. Just they loop it and play it in the car while they're going, they're taking a trip from one place to another. Some people actually play the affirmations while they're trading. I can't. I have to have silence. But the subconscious training is the most important thing. And the subconscious. So here's module 2, for instance. Another subconscious. Everyone has a subconscious training. The first one is strength to pull the trigger. I showed you. The second one here, module 2, is overcoming thoughts of fear and greed. Again, more content on the bottom, an interview with Adam from INO, and some of the other things that I do to support and give you fullness around the importance and some ideas around staying mentally and emotionally fit. Okay, so we really go into this because this is, if there's a guy out there journaling for an hour and I'm the guy that's teaching you how to be mentally and emotionally fit, at least I can do is go into depth on the most important parts. Okay, so here is, the training looks like this. When you click the subconscious training, overcoming thoughts of fear and greed, this will pop up. You pick a spiral color, you press go, and 7 minutes later you're done. You're actually only keeping your eyes open. This thing spins around, and you're only keeping your eyes open for a couple of minutes, not a couple of minutes, for 30 seconds. And this thing, and you've got your eyes closed for the rest of it. It's audio. It's very simple 7-minute training to take. And here's the other part that I mentioned to you, where everybody was getting so much great conditioning and results from the subconscious training for traders. They noticed how it was bleeding into their regular life in these positive ways. Here are some of we've got sessions for you. This about 80 different sessions. Whether you want to stop smoking, if you've got a student in the family, there are things like relaxed test taking, focus and concentration, all things that are subconscious controlled actions. You can improve them by putting in the right suggestions of focus and commitment. You can do that for students. Terrific for students. if you're a golfer, so here's stuff to help you in the other part of your life. Listen, we're humans. I mean, yeah, we're traders, and some people think we're not human, but we really are human, most of us. So the idea here is we try to give you stuff to help you as a human being, because the process of training your subconscious minds works. But I want you to use it I want you to see it work for you as a trader first, okay? And then, so here it is. Here's the link, disciplinetrader.com/community. Again, you can cancel at any time. So I lowered the price just so everybody could get in and keep going with it and develop your own positive momentum for next to nothing as far as price is concerned. I didn't want that to get in the way. There are going to be some people taking advantage of me and going in and downloading whatever things can be downloaded. You won't be. I'll tell you right now, you won't be able to download the actual mental training sessions. Those are proprietary sessions that we've worked to improve over 10 years. I mean, they really do the job for you. Won't be able to utilize them while you're a member, but you won't be able to download them. So if you're thinking about it, don't do it. But there are a lot of there's other reports. Take advantage of this. Don't take advantage of me. Take advantage of this. Try this out. I think you're really, really going to like it. I think that is really where about it for me. Let's see if I can't. I'm not really a technical guy when it comes to that. All right. Are there any questions at all? I don't know if I know how to take questions. I'm looking at the chat box. I think that's the way to see questions. So don't know, but I know my time is close to up because Steve starts in about 10 minutes. So I appreciate everybody being here. I appreciate it, but please, whether you do it through me, you do it for somebody else, start exercising fact. Start exercising science. Stop denying this. You can be a very solid, emotional, fit trader. And you can do that in literal weeks if you just pay attention to science, follow the simple steps. Okay, everybody, I hope that helped, especially the journaling part, the understanding of the subconscious and conscious mind. Get a chance to see Bruce Lipton or read about him. You can Google him, and he's got some really good stuff on the mind science. He's one of my mentors. Do your thing, get aboard, stay positive, and stay disciplined.
Well, thank you, Norman, for that. That was a great presentation. Let me just get the screen and share the screen from him. Just give me a second here, guys. All right, everybody, welcome back. Thank you very much, Greg, Mr. Norman. Greg, he did a phenomenal job. You know, I've learned so much. You know what the funny part about the whole thing of what Norman was talking about? Norman actually brought up some very good points, and one of the main points that I thought was where I learned a lot from it is that he was talking about journaling. And when it came to journaling, I'm actually going to be doing a little bit of a workshop on that too for my presentation when I come on. And just to hear, and you probably can hear from every single speaker here, they're all going to be talking about not one of the things we all have to overcome is the discipline part, and also, the journaling and managing what we're doing right and what we're doing wrong. So, I thought that was a great point that he brought up, and what's great because I'm going to be actually doing a little demonstration on that also, because that's, the greatest thing that I always tell everybody is that you have to learn before you could earn. And, the only way to learn is you got to lose. And losing is not a good thing, but if you know why you lost, you're not going to do it again. So thanks Norman, for that. And in the meantime, we're going to be coming back for our next presenter that will be joining just in a few more moments. And for everybody here that is interested, hold on one second. Let me just get back to the Cybertrade University website. And we are, once again, if you want to find out more about Norman Halitz, please click on his link, and he'll be able to, we'll post that link for you guys to register in the meantime. And then for everyone else that still wants to get into the raffle regarding about winning the trading computer, we're going to announce it, through one of the speakers over the course of the day. So just click over here, and you can register for that package as we go on. All right. In the meantime, we're going to give away a mouse pad. How about that? How about we give away one of the nicest, one of the most popular items that we sell here at Cyber Trade University? It's our Cyber Clock mouse pad. It tells you the best time. It's I know Norman probably would appreciate this, but it teaches you the best time and the worst times to trade. So basically, I want to come up with a question for everybody, and whoever can call in Cyber Trade University first will win this mouse pad. So one of the things I want to kind of everybody ready for a little fun while we're waiting for our next presenter to come on in the next 10 minutes. Let's have a little fun, right? And we're going to give away a book clip. We're going to give away a book also. All right. So the question is, who was the original SOS bandit day trader in the industry? And that is, and don't you just call in now at 877-70-CYBER, okay? But if you know who that is, he's the godfather of day trading. He started when he first started. He's the one that came out in 1987, if anybody knows. And it's not me. No, it's not me. I was 1,000 on that list. Not as 10 million. But just give us a call here at 877. Whoever comes up with that answer correctly will win that mouse pad. And next time, and then we'll do another one. We'll give away a book at the next presenter. In the meantime, we're going to take a little break right now for about 5 minutes, and we'll be picking up. So everybody, going to hear a little moment of silence, and we'll be right back. Thanks. All right, so no need to call in anymore. Deb Fine got it right. The answer was, does anybody know the answer? I know some of you guys have been calling in. There you go, Deborah. Good for you. Deb figured it out. That was Harvey Halkin. That's right. That's right. Harvey Halkin, the godfather of Wall Street, the original day trader. And let me just bring up his, he came out with the original book of the SOS Bandits. So if you actually did a Google search, you probably would have found it. But he basically started it, and that's where it came about. I actually had the pleasure of meeting Harvey Halkin a few times. And let me just bring it up. The electronic day trader. There he is, right there. Soul's Bandits, that was the famous book right there, The Electronic Day Trader. All right, guys, so we're going to be back. You know, our next big speaker is going to be coming up just in the next few moments. And hold on one second. Let me just get that screen set up nicely so you guys could see it nice and clear. There we go. There we go. All right, so just a couple more minutes, ladies and gentlemen, 3 more minutes before we bring in our next speaker, which all of you are very familiar with, Steve Bigelow from Candlestick Forum. He's going to be joining us just in about 5 more minutes. Actually, just 2 more minutes. Time's flying. But stand by. We will be getting started shortly, guys. Thanks. All right, guys, we're going to get started. Hold on one second. I'm going to make an announcement of my next presenter. But first of all, I'd like to, for some of them logged in late, just to kind of remind all of you, we're giving away gifts as we start with certain speakers that come on at the end of the speakers. We're giving away books. We're giving away mouse pads. We're giving away clocks. We're giving away great gifts. And most importantly, we're giving away the grand prize of a trading computer from our friends over at tradingcomputers.com. And I'd like to thank Deborah Fine, one of the students of Cyber University, was right. Harvey Halkin was the original Souls Bandit of the early 90s who started day trading, so that was a great call. We're going to come out with some other good questions right after every presenter to kind of keep you guys have some fun and try to win in, so don't forget to call in. We'll put the number up there. But before we move forward and do those, I want to bring in our next guest. And let me just do a quick little intro. Our next guest is Steve Bigelow. Now, I know Steve Bigelow for several years. Hold on one second. There we go. I know Steve Bigelow for several years. Actually, had the opportunity to meet him a few times. And Steve's been another great contributor to the trading community. Has done wonders, world known around. A lot of you probably know him very well. Probably one of I would call him the godfather of candlesticks, Steve Bigelow. But he's had over 30 years of trading with candlestick singles. And, like I said, he's been on Cyber Trading University several times over the years. Know probably Steve, another guy, 10+ years in the trading industry. So he's going to talk a little bit regarding his book that he wrote. There's 3 books. He's going to talk about tell you some features and the advantages of how to use these certain candlesticks in in today's markets, today's volatile markets, and then he'll tell you a little bit at the end of the presentation if you want to know more about of his products. He'll tell you a little bit more how to find them. So without further ado, Steve, the stage is all yours.
All right, well, thank you. Let me see if I can, I need to find the chat room. Oops, I don't see the questions and answers. I was going to let everybody do questions or ask questions as we go along. All right, welcome everybody. I'm trying to get the where I can see the questions. There we go. Okay. And I'll try to answer things as we go along. I guess my first question is, just so I know how fast or slow to go, how many people have seen my presentations before? Yes, or Y for yes, N for no. All right. Most everybody. All right, so all right, great. We'll zip right along here. What we're going to do today is, I've written 3 books on candlestick analysis. The first book was back in 2001, published by Wiley & Sons, kind of the basics. Then I went to a more meaty book, High Profit Candlestick Patterns. And then what I discovered through the years is, even though people know what to do or what to look for, they still have a problem with their own emotions. So I went through a whole process of demonstrating how to use candlesticks to kind of eliminate your emotions out of your trading, which was an easy book for me to write, because when I first started trading, I was the worst investor in the world. I was even a stockbroker for 8 years. And my biggest bugaboo was my own emotions. So using candlestick signals and patterns to tell you what the probabilities are, you can create your own discipline, so you're not working on your emotions, so or working off of your emotions. So probably, if most of you have seen the sessions before, you know there's 12 major signals, and a lot of people ask, well, which signals and patterns work the best? And the answer is none, because each one will work, or each signal or pattern will work extremely well depending on what the market conditions are at the time. So today we might see hammer signals in this market. Next month it might be shooting stars. So it all depends on what the market conditions are. So if we can learn the simple logic that's incorporated into the signals and patterns that will be likely to set us up for big gains, there is a way to quantify that, and that's what we're going to kind of do today. So essentially what we want to do is be prepared for the big moves based upon historic results, and that's what the candlestick signals and patterns do for us. And what I try to do is kind of teach people how to anticipate what is going to happen next based upon what's happened historically. And I use that in the same reference as, if you leave home and you make 3 less, what 2 people should you see the next? And that's the catcher and the umpire. Anyway, so here we go. So what are the best signals and patterns? Basically, we can find the best signals and patterns by identifying what our market trend is, and we can do that easily knowing what the candlestick signals are telling us. Now, on my charts, everybody knows that my charts are very simple. I've got the 200 simple moving average, the 50 days simple moving average, the 20-day simple moving average. And the reason those are on our charts is because every major money manager around the world uses those moving averages to tell us or to make their decisions about their portfolio. Now, I tell people in these sessions, we move fast enough that there's not even time to take notes, but if you want to take one note, the note is the T-line, the 8 exponential moving average. And there's a very simple process for using the T-line. And that is, if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. So I tell people, I see lots of investment promoters say, yeah, we made big money here and we made big money here. I'm not interested in that. I was interested in what was happening here to tell me this big move was about ready to happen. Yes, T-line works on all the charts. Candlestick signals work on all the charts. Let me see what my next one. All right, let me go back here one. There is one very simple concept built into candlestick signals, and that is that they are the accumulative knowledge of everybody buying and selling during a specific time frame. And that time frame could be the 1 minute, 3 minute, 10-minute chart combination if you're trading the E-minis, or the daily, weekly, or monthly chart if you're a long-term investor, or anything in between, depending on how active you're trading. So the candlestick signals, again, being the accumulative knowledge of everybody buying and selling, it's basically the graphic depiction of what's going on in human investor sentiment. And so I always use the statement that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And candlestick analysis is merely the graphic depiction of what's going on in human or investor sentiment. If you add the T-line, which is the 8 exponential moving average, there's a simple concept that the major moving averages act like magnets because that's where everybody's watching to see what decisions are being made. So prices will usually move or bounce off those moving averages. The T-line is something that nobody has on their charts. So the reason the fact that they do work so effectively is because that's probably where human emotions naturally work. So essentially what we're doing is we're taking the T-line, which is a kind of a Fibonacci number, where it's a natural number or a natural level of human nature, and the graphic depiction of human nature. If you add those two together, you get a very strong combination of what your trend analysis should be. So we're looking for the bullish power signals and patterns, and here are some of them what we're going to go through, and I'm going to go through quickly. Again, this is more just sit back and let just kind of visually watch what's going on. But here's some of the ones that we're going to go through. Number one is your best friend. Now, we know what the doji is. The doji is where it opens and closes during the same during a time frame at the same level. This is a doji star. If the price move is huge during the time frame, and I'm going to, instead of using time frame, I'm going to say daily. Again, if you're looking at a daily chart, you could be also looking at a minute chart or a 10-minute chart. But a long-legged doji, a dragonfly doji looks like a dragonfly. Opens at the top, trades down, closes at the top. And the Japanese rice traders explain the gravestone doji as the warriors coming out of camp, going into battle, and by the end of the day, they're beaten back into camp and leaving their dead all over the field. That's the gravestone doji. So if you see a doji in the oversold condition, and my oversold condition is I use stochastics of 1233. And that's not anything set in stone. That was a very sophisticated process of just tweaking the charts to where the bottoms were coinciding with the bottoms and the tops were coinciding with the tops. But if you see a doji in the oversold condition followed by a gap up, the probabilities are extremely strong. You're going to have not only an uptrend, but a very strong uptrend. That's why we call this your best friend. This is probably the best and most frequent signal that you're going to come across, that anytime you see that doji followed by a gap up, especially in the oversold area, that, remember, the doji tells you there's indecision. The gap up is telling you they've made their decision, and with great enthusiasm. What is a daytime frame? What is a daytime frame chart? Oh, a daily chart. If I'm trading off the daily charts, or yeah, that's a daily chart. It doesn't matter what type of doji. Remember, a doji, no matter what it is telling you there's indecision between the bulls and the bears. What is the Karakaka Sasa? Oh, I don't know what that is myself. Slow stochastics. So anytime I see this this doji gap up, and again, remember what our criteria is. You're in a downtrend. You're in an uptrend when you see a candlestick buy signal and a close above the T line. You're in a downtrend if you see a candlestick sell signal and a close below the T line until you see a reversal signal back up above the T line. This can be used for forex. Candlestick signals are merely the graphic depiction of what's going on in human emotion, no matter what you're trading, whether it's bonds, stocks, currencies, commodities, or tulip bulbs. Anything that you have fear and greed, candlestick analysis basically tells you what's going on in investor sentiment. So I used to be afraid to buy this because I'd think, well, man, we're in a downtrend. Is this going to work? And I discovered that a huge percent of the time, yes, it's going to work. I tell people, don't be afraid to use candlesticks. I tell people the first time I had sex, I was scared. But then again, it was dark and I was all by myself. So anyways, anytime I see a doji gap up, especially when they gap it back up above the T line, it tells me I've got a high probability I'm going to be in a very strong uptrend. What do you use as an oversold? Below 20, overbought above 80. I'm just trying to keep you awake, Carl. Yeah, we can get through the question. Don't worry. I talk fast, and a lot of these are. So anytime I see that doji gap up, now here's our next one of our next signals we'll get to. Is this what we call a doji sandwich? A doji sandwich is a big bullish day, a doji, and then the next big bullish day, if it trades positive, this day right here will usually be equivalent to this day right here. So if you're a day trader, when you see this go positive, you know the probabilities are pretty strong that it's going to be this day. You've got at least knowing that you not only have a good positive trade, but you can see what the magnitude of that trade will be. So when I'm looking for my ultimate criteria for getting into a position, I'm looking for the signals. I'm seeing whether the stochastic, and this is on a bullish nature, seeing whether the stochastics are oversold. Then I see if there's a gap up above the from the doji or any signal, and then if it closes above the T line. These are all the criteria that I'm looking for. Buy signals or indecisive signals, stochastics in the oversold area, they gap it up above the T line and confirm. That tells me there's been a strong change of investor sentiment. What does it matter if the T line is? It doesn't matter whether the T line is above or below the above the 50-day moving average. We're buying the signals. The moving averages just tell you what the moving averages are. Now, obviously, if we see a buy signal occurring right on a moving average, that basically tells us immediately what the investor sentiment was doing at that level. So again, anytime you see, and here's another little, these are things that I teach in our chat rooms. If you see a flat trading area, indecisive, and the last signal, inordinately strong percentage that it will be a doji, whatever they gap it from there will tell you which way they're taking that position, especially the prognosis would be that we're going positive because we're already in an oversold area. So again, if you see a series of indecisive trading ending with a doji, look to see which way they take it from there. Why is the ADMA not the 9 EMA? You can use whatever you want. I can start with the ADMA and see if it works for you. If you think you can find something better. The nice thing about candlestick analysis is this is not a new fangled investment process. This has been around for 400 years. The Japanese rice traders that developed this did not become wealthy in Japan. They became legendarily wealthy. They were the powerhouse, the financial powerhouse in Japan for centuries. So this is not a criteria that may work sometimes and doesn't work sometimes. This is a criteria that the Japanese rice traders have shown us over 400 years, that human nature works the exact same way, and it's going to work the exact same way 400 years from now. So all we're doing is learning what were the signals and what were the high probability setups to tell us that we're in the right direction at the right time. So anytime I see a doji and they gap it up, especially a gap it up above the T-line, that tells me my uptrend's in progress. We have, I can scan in less than 20 minutes for the best 2 or 3 trades out of the universe of whatever you want to call the universe, 7,800 trading entities or 10,000 trading entities. In less than 20 minutes, I teach people how to set up their own scans to come up with the best trades for the next day or the next week or whatever time frame. What percentage of the time do these criteria align work versus not? I would say unofficially, because I've never quantified them, that approximately 70%, or I put it this way, I know that 2 out of every 3 trades that I put on are going to work. I don't know whether they're going to be up 0.3% or up 300%. I just know I'm in the right direction at the right time until I see a sell signal. That also means that it used to be when I put on a trade, it was because I was smarter than everybody else, and when it goes up, or it should go up, it's because of my great intellect, and when it continued to go down, it was because people that weren't as smart as me didn't see the rationale for it going up yet. And what would happen then is, like most people, if I bought something that I thought should be going up and it kept going down, going down, going down, going down, I'd finally sell it at the bottom. That's the whole concept of candlestick analysis. It can graphically show you where people panic sell at the bottom or buy exuberantly at the top. Well, I was always the one panic selling at the bottom. Or the other side of the coin is that people buy a position, and it used to be that I had so many rare situations where my positions would go up. I'd say, boy, if this, I've got a profit. I sure would look stupid if I let this profit go back to a loss. So I'd cut my losses short, or I'd cut my profits short. I'd sell out quickly on a profit, and I'd hang on to the losses. And that's called eating like a bird and pooping like an elephant. What candlesticks did for me was, we always have the sage advice from investment advisors, say cut your losses short and let your profits run. The only problem is in 40 years of listening to all the sage advice from money managers, I've never heard them once tell you how you cut your losses short and let your profits run. Candlestick Signals has their very simple methods for doing that, to tell you when to get in and when to get out of a trade. So again, anytime I see a gap up, the bigger the gap up, the higher the probability I'm going to be in what we call 45 degree. That's a doji strong move, and then it can stay long until you see a sell signal and a close back below the T line. Do you always sell only after the candlestick close? What do you do when the price moves way in the wrong direction, but the candle is still open? Jack, I will get to that answer as we go along. Is the T-line for a certain period? Now it's just the 8 exponential moving average. This chart right here could be a 1-minute chart, a 10-minute chart, a daily chart, or a monthly chart. It'll all look the exact same, and I use the same criteria, all those moving averages. So this is what I'm looking for, as that doji gap up. Notice how they broke this downtrending channel. Stochastics in the oversold area. So the very simple premise of candlesticks from the Japanese rice traders is, if you see a candlestick buy signal in the oversold condition, the probabilities are pretty strong that you're heading up. If you see a candlestick sell signal in the overbought condition, the probabilities are pretty strong you're about ready to head back down. Do you look for hanging man and hammers at the end of a trend? Yes, there's 12 major signals. We're just not going to be going through them here. We're at the next step. So anytime I see a market direction where I see a morning star type signal, very simple. If they open this positive the next day, we know that the T-line's not acting as resistance anymore, and it's confirming our buy signal, our reversal signal. It's time to be buying. Then the stop loss is very simple. If this was a stock versus the Dow, and I was buying on positive trading, where would I not want to see this close? Wouldn't want to see it close back below the T-line. That would tell me the T-line is still acting as resistance. So that gets me right out of a trade with small losses and lets me hold for big profits. So the doji in conjunction with other signals, this is what we call the left-right combo. And the left-right combo is a doji followed by a bullish engulfing signal. Doji is that little left jab. The bullish engulfing, that big right roundhouse, tells you there's been a very strong reversal. Jim, I don't trade forex. I trade the currencies straight up. If I'm buying the dollar, I'm buying the dollar chart. If I'm selling the euro, I'm selling the euro. I'm not trying to match two of them together. If you see that left-right combo, you can start buying if it starts trading up above the T-line. Because this is what we call convergence technology or convergence analysis when we analyze. Notice we have a left-right combo in the oversold area. It starts trading above the T-line, telling us the T-line is not acting as resistance. It's breaking this downward trend channel, and it occurred right smack dab on the 50-day moving average. Where do most people make their decisions? They make their decisions at the support or resistance levels. We just have the benefit of seeing what's going on at those levels immediately. Flat series of dojis, bullish confirmation, left-right combo. A left-right combo over here starts your strong uptrend. Left-right combo, close above the T-line. You add on top of that it had a doji sandwich. We know what the result of a doji sandwich is. More upside potential. Doji sandwich is that big candle, a doji. If they open up positive the next day, there's a very simple rule of the doji, which is the price is usually going to move in the direction of how they open it after a doji. So if we see stochastics coming up out of an oversold condition, closing above the T-line, and they open up positive, we don't have to wait for it to confirm. We're buying immediately as soon as we see that they're not selling it off, they're taking it up. Puts us in positions early in a big price move. If you see that doji sandwich right smack dab on the T-line, if they open up positive the next day, number one, we know that it's going to move in the direction of how they open it after a doji. Number two, we know it's going to form a doji sandwich. Three, we know it's going to break this downtrending channel. And four, we're coming out of the oversold area and our stochastics heading up. That tells us we have a strong probability we're now in an uptrend. Again, the doji sandwich, positive trading. First of all, if we were day trading this on a doji sandwich basis and opening positive, where do you think our trade's going to go to that day? Right back up to the 50-day moving average. So this is not rocket science. I tell people, as long as you can see, you can trade candlesticks. If one doji means indecision, a series of doji means greater indecision. We're looking for what that decision is. And notice what this decision was after a series of dojis in the oversold area. Bullish confirmation, number one. Number two, they closed above the T-line. What do we want to see? Candlestick signals also have a very simple process for giving you high probability trade entry situations so that you're in the right position at the right time. So very simple common sense says if we see a candlestick buy signal in the oversold area, what do we want to see the next day to confirm? We want to see the bulls are still there. If it opens positive, we're buying immediately because that tells us the bulls are still there. And if they go positive, what's it telling us about this trend? That everybody that was watching this trend now see that it's broken out, and they're going to be buying also. We just happen to get in early. So I tell people, all you have to do is be able to see. It's like the old couple getting ready for bed. She's standing there in front of the mirror saying, look at my face. It's wrinkly. My arms are skinny. My butt's spindly. My legs are scrawny. She turned around to her husband and said, is there anything nice you could say about my body that would make me feel good? And he goes, well, your eyesight's still pretty good. So as long as you can see, you don't have to be a technical analyst. All you have to do is understand what's the makeup of the signals and what the results should be afterwards. Anytime I see a series of dojis, I'm looking for a reversal. How do you pick the stocks? Very simple scan, or scans. Once you set up your scans, in each day when you refresh them, you're going to have the best setups very quickly. Is the 50% retracement significant? Not a part of a, not as far as, let's put it this way. The first criteria I use is candlestick signals. Then I add anything else that I know is going to add credibility to where a reversal signal is occurring. If it's not occurring off a major moving average, I may put the Fibonacci numbers to see if it was picking up or reversing off the Fibonacci numbers, or a distant trend line, or anything else that would confirm why that reversal signal is occurring where it is becomes additional criteria. Here's just logic. Where do most people sell? They panic sell at the bottom. Everybody says, well, where do we grab for the fallen knife? Candlestick signals tell you when the reversal is about to occur, and you get ready to start buying. The first warning here would be a gap down in the oversold area. That tells you to start watching for a buy signal. How will we be able to access recordings? So I think it's going to be available to everybody. Slow stochastics, doji gap up, or any signal followed by a gap up, a hammer signal followed by a gap up in the oversold condition. And then notice what got it through the T-line, the doji sandwich. Is the gap up and down from market close and open? Yes. So if you're following stocks, you've got the break between yesterday's close and the next morning's open. Whereas on intraday trading, you're not going to have those gaps, but you still will have most of the signals occurring. So there's your bullish harami, which tells us the selling has stopped. There's only, out of the 56 or 50 or 60 signals in the candlestick universe, there's only 12 that you need to learn, 6 longs and 6 shorts. Not only learning what they look visually, but the Japanese rice traders always so described what the investor sentiment was that created those signals. So that combination pretty much gives you as much insight as to what's going on in a market trend as somebody that's been trading in the market for 50 years. Yes, I use the T-line as a stop loss, and we'll get to that also. What is the difference between a red and green hammer? Nothing. The hammer is the tail 2 times greater than the body. Doesn't matter what the body color is. What are those 12 candles? Oh, I can't show them here, but I'll try to go through it. The bullish harami is one of them. Inside day tells you that the selling has stopped. The kicker signal is one of your strongest reversal signals. Anytime I see a gap up above the previous day's open and goes the opposite direction, I'm buying immediately, because the kicker signal basically tells you there's been a dramatic change of investor sentiment. The investor sentiment has been kicked in the opposite direction. The gray line is the 20-day simple moving average. The strongest signal on an individual basis is the kicker signal. Again, it opens here, closes here. Next day it opens at or above the previous day's open and goes the opposite direction. And the result of that is that usually the investor sentiment has changed so much you're going to have a strong uptrend after that. Let's see. All right. If I'm missing your question, I'll try to get done fast enough where we can take as many questions as we can. Kicker signal, strong uptrend. I'm buying the best kicker signal doesn't have a tail to the downside. But if you see one like this, it still implies there's been a strong change of investor sentiment, and you're going to have a strong uptrend. Kicker signal, the bigger the signal. Here's another simple truism of candlesticks. If the bigger the signal, the higher the probability there's been a change of investor sentiment. What is another term for the T-line? 8 exponential moving average. Just use the 8 exponential moving average. The kicker signal, if it's a false signal, will usually, if it gaps up and does a kicker signal, especially coming out of a fry pan bottom, one of our strongest patterns, that tells you there's a strong change of investor sentiment. Now, if they traded it back below the bottom of that kicker signal, you get right back out. That tells you there's a failure. But that failure is going to be a very small percentage of the time. How does arithmetic trading computers affect these patterns? It doesn't. It's still the accumulative knowledge of everybody making a decision. Let's see, I guess we can still do it on the flutter kicker. A kicker signal is where it opens one day and closes down here. The next day it gaps up at or above the previous day's open and goes the opposite direction. Now this is what we call a flutter kicker signal, where there's an indecisive day or a doji day that gapped up. But that now gives you a better perspective of what's going to happen the next day. What do we know about a doji? It's going to move in the direction of how they open it the next day. So if they open up positive, we're buying immediately. The only difference between a kicker signal and a flutter kicker signal is that a kicker signal, if we see it, we've got to scramble around, make sure we have enough money, and get into that positions immediately. Whereas if a flutter kicker is formed, we know very simply, we need to be ready the next day to buy that position, so we're prepared for it. And so a flutter kicker is basically that if you took out this little flutter, you still have a kicker signal. Steady Eddy is what is one of our best trends, and that is using the T-line. The Japanese rice traders always say, let the market tell you what the market is doing. So if we see a buy signal, notice a little fry pan bottom breakout, you stay long until you see a candlestick sell signal and a close back below the T-line. There's a lot of times there'd be some indecisive trading, but as long as it doesn't close. Now here's a situation where it just closed below the T-line. But what was the market telling us prior to this? That we were in a strong uptrend above the T-line. If it closed right here, my criteria is it needs to open positive and trade positive the next day to stay in it. If it opens lower, that tells me the T-line's not acting as support anymore. Why? Stochastics in one time frame going up and going down on another. Why stochastics in one time frame? Oh, because during different time frames, the movements are going to change, and that's a whole different explanation. What are you calling? Did you? Okay, I hope I got the kicker signals. Do you trade on daily charts? Yes. When I was SOS trading, I would trade the E-minis on a 1-minute, 3-minute, 10-minute chart combination. Most of my trading is on swing trade basis, where my positions are usually anywhere from 2 to 10 trading days. But intraday, I will be trading soybeans, the dollar, cattle, crude oil, and I will trade off the usually off the 10-minute chart. What is the E-mini? That is a small contract that trades the S&P 500. Why soybeans? Because the volume is good and the charts are extremely good as far as seeing. And again, I trade off the 10-minute chart, and I use the 10 or the T-line. So what's the market telling us? As long as it stayed above the T-line, we stayed long. What did it do right here? It came right smack dab to the 50-day moving average and did a morning star signal. As soon as it closed back up here, we're buying again because this is telling us we had a big J-hook pattern. The uptrend is still in progress. How about you can trade off the tick chart? Again, anything that trades with fear and greed, which is the measurement of everything, you can use that chart for, you can use candlesticks on it. And I tell people, if you've got a trading program already, if you overlay candlesticks on top of it, it's going to make it much more easy to see what's going on in price movements. Sorry, is soybean a breakout market? I don't know. I haven't looked at it in the last couple of days. I've been short crude oil, and I've been short lean hogs. What is the best time frame to trade gold? That's up to each individual person, D. Depends on what time frames they want to trade. The charts, if you decide you're only going to trade gold Twice a day, you might use a 5-minute, 10-minute, 30-minute chart combination. If you're going to trade gold almost on a minute basis, you might use a 1-minute, 5-minute, 10-minute chart combination. If you're going to trade gold for a swing trade, you might use the hourly chart and the daily chart. The T-line is the 8 exponential moving average. Does the system work with range bars? You can use whatever you want. The system works, then you can add whatever else you want on there to confirm what you're trading. This is what we call a steady eddy, a big pop, and then as long as it stays above the T-line, you stay long until you see a sell signal and a close back below the T-line. Your best friend, the bigger the price move, the higher the probability you're going to be in an uptrend. The bigger the price move, you just stay long until you see a sell signal and a close back below the T-line. Now, my biggest emotional problem when I was trading was if I got out of a trade, they scared me out, I'm not going to get back in because they're not going to fool me. Because, or on the other hand, I'm thinking this is going to be the Dell of my lifetime. It's going to make me a fortune. I'm not going to take any profits. So even when I saw a sell signal or when it started selling off, I would hold on to it because I wasn't going to be fooled out, and I'd hold all the way back down to where I bought it and think, what the heck? Why didn't I take my profits up here? At least now I can see graphically when it's time to get out and when the investor sentiment comes back in and time to get back in. A lot of people say, I don't want to buy a stock up 3, 5, 10, 15, 20, 30, 80, 40, whatever percent. I do if I can see that it's a candlestick buy signal and a breakout. I know there's been a new change of investor sentiment. Or on the bearish side, if I see that slow curve, notice how it stayed below the T-line? That's telling me there's probably going to be a slingshot effect to the downside. The larger the signal, the higher the probability. Again, here's our fry pan bottom, a big rounding bottom that you couldn't trade one way or the other until we had this little kicker signal breakout. That tells me there's a new change of investor sentiment. Time to get into this position. There's our fry pan bottom, cup and handle. It just puts us in situations where the probabilities are pretty strong that you're going to be in the right place at the right time. The opposite of the fry pan is what we call the dumpling top. Notice how once it started trading below the T-line, it couldn't get above the T-line, and this dumpling top tells us there's probably going to be a slingshot effect to the downside. If I'm looking at the Dow to see if there's a reversal, I can analyze just like anything else. There's our big Morningstar signal. There's kind of our doji sandwich, which implies there's going to be more upside. What do we do with this trend? We stay long as it doesn't close back below the T-line. So if I see something like this, which wasn't too long ago in the current trend, a Morningstar signal, a doji sandwich, that was pretty good evidence that the doji sandwich is going to still have a strong uptrend. A lot of people say, well, man, isn't that a scary day? Yes, but it did not do one simple thing. It didn't close back below the T-line. Now we're up here. What's our analysis of the market? Market it's pretty indecisive, but there's one criteria that it hasn't done. They haven't closed below the T-line. So we have a very simple trading concept. We stay long until you see a candlestick sell signal and a close below the T-line. The Morningstar signal is a big down day, a day of indecision, which should be a doji, a hammer, an inverted hammer, a spinning top, any type of candlestick indecisive signal. And the third day closes more than halfway. Again, part of the stop loss process, which is very simple using candlesticks, is the Japanese race traders use the number 2. But it's used quite a bit, that if they close more than halfway up this candle, that tells you the bulls are in control. The further they move this up above the halfway point, the higher the probability you're going to have a strong uptrend. This is one of our recommendations right now, coming out of the slow curve. This is somebody who was asking earlier, what do you do when it trades below the T-line? You wait to see how it closes. It'll trade below the T-line, but as long as it doesn't close below the T-line. Remember, the Japanese race traders boxed in the open and the close. That's the 2 most important decisions during the day. Everything else is noise. It's where they open it and where they close it that tells you what the final decisions were that day. Notice how scary it was on Friday. Friday it sold way off, but closed back up above the T-line. What did that tell us? It tells us the bullish sentiment is still there. You stay long. We bought EXAS very simply. Fry pan bottom, morning star breakout. If it opened positive after this little doji type day right here at the resistance level, that told us we were getting pretty close to a breakout. That if it opened positive, what did it tell us? It was going to move positive and be breaking out. So on the breakout, we could see that there was going to be a strong, usually a breakout is going to be a strong day. So we're in this position because we anticipate that if this is wave 1, this wave is going to still be probably another 3 or 4 points higher. Same scenario on buying UIHC on Friday. A doji right here at the resistance level. They gap it up through this level. What do we got? A fry pan bottom. We're going into wave 3, and wave 3 will probably be the same magnitude as wave 1 over here. So I think that's about all I got, except Pat has done a good special for this session. This is what we call the 5 for 15. And the 5 for 15, Greg, can you put the link in, or maybe I can put the link in? No, I can't put the link in. Let's see. Greg, Fausto, anybody there? We'll try to put the link in here in a second. But the 5 for 15 is that you've got 5 trading CDs telling you how to use the moving averages, how to use the gaps, how to use all the patterns versus the signals. And again, the signals are the cumulative setup for a pattern. If you understand what each signal tells you, and you can see that in a series of signals, you pretty much can identify what's going on. Let's see. We got a little thingy about there. Greg, are you in there? All right. And it shows you, yeah, I think the scanning, we've got the scanning video in here. This usually sells for, well, Shazam, $540. But we're selling it for $15. The reason for that is, through the years, I would always ask people, why isn't everybody using candlestick signals? They make so much sense. And the answer was always there was too many of them to learn, and they didn't always work. And I always came back to one simple criteria, that if they didn't work, we wouldn't be looking at them today. Shouldn't be a hacked site, I wouldn't think. We're protected. Yes, I don't know whether they should be in these in the discs. What do we have in here? Some sort of so what we've come to the conclusion is, if you see the logic of using candlestick signals, we would rather have you getting your feet wet for about the price of 2 Starbucks coffees to see that candlesticks really work. Again, if you have a trading system that works now, if you overlay candlesticks on top of it, it is a hacked site. Bah. Greg, are you still there?
We're here. Is there a problem?
Can you want to put the link in? Can you put the link into the chat
Sure,
room?
I'll post it up there right now for you.
Okay, thanks. Also, I say, wait, there's more. Also, you get 30 days free trial to our website, the Candlestick Forum. We have a chat room that's open every day where people are, it's a good place to kind of confirm your learning process of using candlesticks. We usually have 250, 300 people in there. We've got quite a few people that are very adept at candlesticks. They will come up with good charts. I put out 2 or 3 stock picks every day, not so that people have stock picks, but they could see the video and see what the criteria was for those recommendations. But we try to teach people how to do their own scanning so they're not depending on somebody else's stock pick. And I always use the illustration of the cop that's standing on the street corner, sees this drunk driving down the street, blows his whistle, pulls the guy over. When he walks up to the car, he sees a penguin sitting in the back seat. He says, "What the heck are you doing with a penguin in your back seat?" And the drunk said, "Oh, I found him out on the street. I don't know what to do with him." And the cop said, "Well, take him to the zoo." And the drunk said, "Oh, I didn't think of that." Well, the next day, the cop's standing on the street corner and sees this drunk coming down the street, blows his whistle, pulls the guy over, walks up to the window, and sure enough, the penguin's still sitting in the back seat. And he said to the drunk, "I thought I told you to take the penguin to the zoo." And the drunk said, "I did. He liked it so much, we're going to a baseball game today." So if you don't understand why you're doing something, it doesn't do you any good. What we try to do on the Candlestick Forum is do a teaching process so that you can analyze the charts yourself. We do a Monday night session for members. We do a Thursday night session that's free to everybody, showing what the markets are doing, what signals and patterns seem to be working the best, both for commodities, currencies, and individual stocks. And then about once a week, we would do another training session where we show people how to, instead of buying the videos, you can learn, or we do a hour session on how to scan for the best signals, how to set your stop losses, how to take profits, and how to get back into a trade when it's time to get back into a trade, how to your best entry and exit strategies, how to set up for the best option trades, whether you're using let's see, this thing. No, that's all I have to do is move it off of that screen. How to set up for the best option trades, whether it's a spread, a debit spread, a credit spread, or just buying straight out options. So anyways, I think Greg has put in the link somewhere. That's $15 for the 5 videos, plus you get a 30-day free trial to our website. So with that, I don't know whether I think you can pay with PayPal. I'm not sure. Is there a time limit for watching the online version? I don't know. The videos that you get, you download them onto your computer. You have them for keeps after that. Markets are winding down for the year, and trading trends are uncertain. Is December a good time to get started, or better wait for 2000? No, and the market is going to, the candlestick signals are going to tell you what the market is doing right now. So learning candlesticks at any time. As a matter of fact, being a stockbroker for 8 years, I discovered the brokerage firms have no more idea what makes prices go up or down. Their whole concept is long-term, which is now kind of a obsolete trading method. I would tell people, if you're learning how to invest or you want to teach your kids how to invest, start with candlesticks, because that's just common sense put into a graphic depiction. Then you can learn everything else that's usually not as good after that. Still do not see the link. There's the link right now. No PayPal on your website. If you need to pay some other way, just email abraham@candlestickforum.com. Okay, let me see. If it is, we'll get it cleaned up as fast as possible. The link worked fine. How long are the videos? They're usually about 45 minutes to an hour apiece. Let's see. Can we start 30 days in January versus now? Yes, but just email Abraham at Candlestick Forum and let him know. Let's see how many minutes we got here. I guess a few minutes left. So the major thing now, one thing I should have prerequisite my talk was when I started investing, I was the worst investor in the world. When candlesticks came along, it turned me around. I could see graphically where I was buying at the wrong time or selling at the wrong time. It turned me around 180 degrees. Do we have another way we can see your site? It's www.candlestickforum.com. And I will make sure Abe gets our, we're supposed to be protected, so is your method as good as Steve Nissan? Rudy, I tell people he has a completely different method of teaching than I do. Plus, I don't think he trades. I trade every day. But I tell people I don't like to make an opinion about somebody else's system until I've walked a mile in their shoes for two reasons. One, if I say something that pisses them off, I've got a mile head start. And two, I've still got their shoes. Finding the exponential moving average better than the simple moving average, Greg, it probably doesn't really make that big a difference. We just use the 8 exponential, and it's been working. I used to make good money using candlesticks. Then when somebody brought it to my attention about 5 or 6 years ago, one of my private training students, I make a ton more money now using candlestick or using the T-line, using with candlesticks. Okay, somebody purchased. Thanks, Pat. All right. Yeah, let's see. Okay, all right. Yeah, the link should be working. Oh, let's see. I don't even know what our phone number is because I don't ever call it.
You know what everybody could do? Just Steve, what everybody could do, just go to that link that you got up there. That's the direct link with the promo, and they'll be fine right from there. And they could just email you.
Okay. All right.
Yes.
If you have problems with the link or getting onto the site, just email Abraham at candlestickforum.com. Link is still not working. All right. If the there's the phone number. Thank you, Wack. If you can't get your sign-up link in order, what are you doing trying to be an expert? Harlan, I just guess probably the definition of being an expert. I don't consider myself an expert at anything, and definitely on how to work a website. Okay. Do you teach how to trade the commodities in your chat room? Yeah, usually I'm trading soybeans or cotton or something like that, and I will post those in the website. And usually during the day in the chat room, I'll come in for, I make a few comments in the morning of which stocks or which commodities we're buying or selling. Then I usually come in around noontime when the market quiets down and we go through a lot of the charts. I'll come in 2 or 3 more times during the day just to point out something, and then I'll usually come in for another half an hour at the end of the day to see what the close is doing for us. All right, thank you, Carol. All right. I guess I've pretty much used up all my time. Greg, thank you for letting me be on today. Yeah, we do get a lot of interaction in the room. And again, fortunately, our room is very, I want to say, generous in that everybody, if they've got information, they share it. And they're all trying to help each other. So with that, everybody have a good holiday. If you have problems getting on the site or getting on the link, use Abraham at candlestickforum.com, and he'll get you set up. All right, let me get off the phone or off here, and I'll get on the phone with Abraham and see whether we've been hacked. All right. Thank you, everybody. We'll hopefully see you in the forums.
All right, thank you very much for that, Steve Bigelow. Guys, let's give him a round of applause. We're in another great event. Thank you very much for that, sharing that great knowledge. All right, so anyway, we're going to get that link up for you, and we'll email everybody. Just really quick, just to let everybody know, please do not log out, because if you log out, you can't get back in. We had over 6,000 people registered for this event, and it's counting because everybody wants to listen in. We already met capacity of over 1,000. It was closed out as of about an hour ago, so just want to let you know, if you leave, you can't get back in. So just want to do that for you. So let me just get really quick. Let me get share the screen really quick. All right. Just want to share that with you. And just give me a second here, because we have our new presenter that's going to be joining us in the next few moments. Here we go. All right, so what we're going to do, ladies and gentlemen, before we introduce our next speaker, Alan Nuckman, I want to give away a clock. Who's ready to get it with a clock? Anybody here want to win a clock, a cyber clock? The one that'll save you thousands? All right. All right, so we're going to have a little pop quiz. Everybody ready for a little fun, a little quiz? Okay, so all you're going to have to do is you have to call in if you want to win it, and if everybody knows the answer. So what the question is, okay, the magic question is, who is responsible for the flash crash? Okay? So who is responsible for the flash crash? So for the first, not the HFTs, who's responsible for the flash crash? So if you call CyberTrade University at 877-70-CYBER. That's 877-70-CYBER. If you know the answer of who is responsible for the flash crash, if you know the answer, call in now, and we're going to send you a cyber clock, all right? Does that sound nice? No, it wasn't Kramer. But you know what? Just give us a call, and we're going to give you the answer. All right. So let's give us just give us a few seconds here, and we're going to bring in our next speaker, and he'll be attending us. Alan Nuckman is going to be joining us in a minute or two, and then just stand by. Okay, guys? All right, just want to do a quick audio check for our next speaker that's going to be joining us. Alan Nuckman is Alan. Just do a quick audio check if you can, if your mic is working okay.
Test, 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 1, 2, 1, 2. Alan Nuckman. I'll be on board in just
All
1
right,
second.
perfect. You sound perfect. All right, so let me just do a quick intro for Alan. Alan's actually one of our new channel partners here at Cybertrade University, another big contributor and to education of trading market. You've probably seen him a lot. He's very well known. He's weekly on CNBC, Bloomberg, and CNN, and all the financial outlets all over the world. And we're fortunate to have Alan to come and join Cybertrade University on behalf of educating all of you guys, talk a little bit about, weekly options and tell you about equities and commodities. Has 20 years of experience of trading in the market. He actually also was a runner, in the pit of the Chicago Board of Trade at the CBOT, and also the Treasury bond, and also at the Treasury bond. So the thing I want all of you guys to understand is that here at Cybertrade University, one thing you got to remember, it's all about having, the right traders that work on the floor of the market, and because that's where you're going to get your experience. So just keep in mind a couple of things I just want to, before we get started, just to let everybody know, we are way over our capacity. We had over 7,000 registrants already. We only allowed to have 1,000, so if you do log out, you can't get back in. You're going to lose your seat. So we only have a capacity of 1,000 people that are allowed in here. So just want to give you guys a heads up. Just don't log out if you want to stay in for the rest of the presentation, because we've got 3 other great people that are coming in. You have Alan, you're going to have Tom Busby, you're going to have myself, and you're going to have, whatchamacallit, you have us. Well, so you got a whole bunch of other people here. We had Norman, we had myself, and, we're going to have Greg McDermott. That's right. A lot of people here, 6 speakers. So enjoy the presentation, everyone. Alan, I want to pass the mic over to you. The stage is all yours, Alan.
All right, thank you. Thank you for the introduction. Let's just spend a second here. So if you could swap out so I can use my screen, that would be great. There we go. Show my screen. And let's make sure that I'm on the right spot here. And start the slideshow from the beginning. Audience view. There we go. If we could get some confirmation that you're hearing and seeing me, that would be fantastic. Then we can get started. I'd appreciate that. There we go. All right. Just want to do one more audio check. Test, 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 1, 2, 1, 2. And there we go. Yes, thank you. All right, I'll get the questions here. And so everybody gets ready for the holiday seasons coming up here. Just got my Christmas tree yesterday. I got it yesterday afternoon before everybody went out Friday night and Saturday to get it. So anyways, let's talk about the markets, because that's what we're here for. Let me just get everything started here. Thank you again. Thank you for your introduction. My name's Alan Nuckman. I'm going to today talk about, I'm with Bar Chart, Chief Options Strategist, how to trade the stock market like never before, and how to approach the markets. Let me make sure that I've got everything going there. So today I want to talk about a trading plan, all right? And everything is very simple. When it comes to the markets, trading's not hard. Making money and having discipline, that's what's hard. It's a process, it's a methodology, and we're going to talk a little bit about it, and then I'm going to show a couple of different strategies, because market conditions are always changing. The markets are always in motion, and you need to know how to make money in different underlying conditions with different strategies. You have a toolbox of strategies, and you want to take the right tool for the right situation. So, trading is a process, and it's important to understand the conditions. So to go after the markets in a methodical way, it's important to have a trading plan. Now, trading is very simple, and you want to dial down. You want to start very high, your 30,000-foot analysis. You want to look at the markets in general, see where we are. Then you analyze individual sectors, and then the individual stocks within those sectors, and you select the right strategy. And it's all about risk, controlling risk and probability and money management. It's not what you trade, it's how you trade that's it's crucial important. And I use the word trading and in investing not interchangeably. A trader is a more sophisticated investor. Investor wants to make money. A trader has a plan to make money. They know where they want to get in. They know what they're risking. They know where they want to get out if it goes for them and or against them. So, you know, a trader is a more complementary term. An investor puts some money down on a position. You know, they want to make $500. They want to make $1,000. They don't have a plan how to get there. And if a position goes against them, they don't have an exit strategy. They don't understand the discipline. They don't understand the risk reward. They don't understand a lot of the factors. They just want to make money. So let's talk about how to do that. And it's very simple. Every investment in your life goes through the same 4-step process. Identify the trading candidate. Is it a house you want to buy? Is it a rental property? Is it, excuse me, a CD? You have to identify your candidate. Then you execute with money management. So you have to identify the risk reward. You want to figure out how much you're going to risk on the trade, what your expectations are, make sure it has a solid enough payoff to warrant your time and your investment. Then once you're into the position, you need to manage it. So if you're in a stock position, you want to move your stop losses up. You want to protect your gains, so forth, so forth. And the idea is to take this same process. You want to maximize the overall trend and repeat. It's very simple. Identify, execute, manage, maximize, repeat. Then do it over and over again. Trading is not exciting. And it shouldn't be exciting. If it's very exciting for you, then you're not doing it correctly. And you're having an emotional component in there. Trading should be rather methodical. You identify, execute, manage to maximize. What's fun is making money. Making money is fun, not trading. So let's talk about how to do that. And I choose options for many reasons. They mentioned a little bit in my bio at the introduction here that, you know, I've been at the markets. I've been at the markets now for 25 years. I am an old grizzled trader. I've traded every market. I've traded every product, up, down, sideways. And what I found is that for me personally, I'm in a position in my life that I don't want to sit there and watch the markets trade all day, every day. That requires an extreme amount of discipline, So I like to use options as my vehicle to give myself some advantages over the markets and to have some stability and some staying power so that I can do the things that I want to do. And using options as a vehicle gives you many advantages. So a lot of people, you know, when you think of options, you think it's very complicated. It's very, very simple. You can choose strategies where you're using less capital, you've got less risk, less time management, and time management is key because our time is very, very valuable. You know, spending a lot of time staring at a computer screen watching markets tick up or down is not only, you know, a waste of time, but it's often financially destructive and emotionally destructive. It's very, very hard to, you know, be disciplined if you're watching every tick. And the idea here is to also get greater returns. So let's talk about doing that today. Trade the stock market like never before. First, let's analyze, like I talked about, let's analyze the 30,000-foot view of the markets and see where we are. Well, right now, you cannot argue that we are in a bullish market. Now, that may change, but the conditions are what the conditions are. You know, the markets aren't good or bad. They just are, and right now they're bullish. For anybody to argue that that's not the case, you know, is doing themselves a disservice. Yes, we had a pullback, but we saw an extreme, amazing, epic recovery, as we have seen every time in the last 5 years. Now, there'll be a time when it doesn't do that, but right now, that's where we stand, and the overall trends remain up. The S&P has made 50 new highs so far this year. If you look at the markets, the S&P is up 12%, the Dow's up 8%, and the NASDAQ 100's up 20% so far this year. So people think, well, I missed out on the opportunity. No, there's opportunities in the markets. Markets go up, markets go down, markets go sideways. And that's the beauty of options. I'll show you some strategies to take advantage of all conditions. Limited risk strategies, high probability strategies. That's what's important. So like I said, I've been doing this for a long time. I started on the floor at Chicago Board of Trade. He mentioned I was a runner. There was no formal education for trading. You had to learn by doing. Back in the day, there were very few classes on trading in college. So you started as a runner making $2.65 an hour to get yourself in the door. I was working with people that didn't finish high school. I was working with people that had Ivy League degrees. You had to learn by doing, and being down on the floor was a very unique venue. Now is the best time in history to trade because things have changed. You don't have to start on the trading floor. You can, on your computer, have access to all of the opportunities and more opportunities than ever imagined in history as far as trading markets, trading vehicles, and the electronic trading now has leveled the playing field. You don't have to be on the trading floor. That advantage is out the window. Commissions are low, spreads are tight, there are markets that move at all times. When I was on the trading floor, you were limited to whatever pit you were in. Now you can look at your screen. If oil's moving or energy stocks are moving, you can trade those. You can trade gold. You can trade metals. You can trade, anything, anytime, any direction, anywhere, and get in and out very smoothly. Like I said, the commissions are very low, so that is no longer a factor as well. So I'm involved in the markets. The first thing I tell people is not to watch television. I'm on television on a regular basis, not to sit there and watch 6, 8 hours, 10 hours of CNBC a day because it really impacts your discipline. And understand that their job is not to help you make money, not to help make money. I'm trying to see what the answer was to the question because I was intrigued. The winner of the clock, the answer was Waddle and Reed. 4.1 billion trade blamed for the, so it was a fat finger trade blamed for the flash crash. But anyway, so I was saying that you got to understand CNBC is not there to help you make money. They're there to get you emotional so you'll continue to watch their channel and they can pay for their advertisers. So understand that the arm's length distance is probably the best way to participate in the markets because you'll stick to your discipline, and that's what's required for the long run. This is not gambling. This is not a short-term sprint. This is a marathon. You're preparing, in the old adage you learn when you're a very young trader, is that trade for tomorrow. Trade for tomorrow. You make money today, but you're trading for tomorrow. You're looking to be there for that new opportunity tomorrow because there always is a new opportunity. Let's look at what the markets are doing. The Dow Jones, which had been a dog for a long time, if you look at it, it was actually negative in October. Negative. That's amazing. Now it's up 8%. Amazing recovery, new highs in the Dow. The Dow is not the stock market. The Dow is only 30 stocks, so a professional will never talk about what the Dow is doing as far as a gauge of the market. There are opportunities there because there are still 9 stocks in the Dow that are negative in 2014. That's amazing. I'm not good with the math, but that's almost a third of the 30 stocks. So that means opportunity in my mind. If we look at the NASDAQ, that's been leading the way, obviously. New highs there. If you look at that recent sell-off just last week in the NASDAQ, some profit taking. It's been a whole week since we made new all-time highs in the NASDAQ. Well, not all-time, I guess, if you count 2000, the bubble of the dot-com, but I don't really count that. So, we had a 75-point sell-off. You add 75 points on that last high. You were looking at about 2.5% up move here in the near term in the NASDAQ. And then if you take that 400-point sell-off where the NASDAQ went from 4,100 down to 3,700, you add it on top of that 4,100, 4,500 is the target in the NASDAQ. So we've still got a lot more upside here, even though we haven't seen a pullback in the market. If you're looking at the market, you follow the S&P. The S&P is the market. That's the barometer. That's what everybody scored against. There is no discussion about what trend we're in. We are in an uptrend. And that can change, and it will change. But right now, I'm going to go with the markets give us. So let's talk about it's the best time in history. There are always opportunities, and trading is all about risk control. A professional trader focuses on risk. That's their number one focus. What's my worst case scenario? Where am I going to put my stop? Where am I going to exit? What is the worst thing that can happen? And it's about money management as well. You take your account, you divide it into 20 pieces. Each piece of your account is worth 5%. And if you put in a stop loss at half, you're risking 2.5% on each and every trade. If that trade goes completely against you, you still have 97.5% of your account left. It's about risk control, being here for the long term. So let's talk about options. And I'm going to show you 2 quick option strategies that are very, very, very simple. It's not about trying to impress you with my options knowledge or the Greeks or the math behind it. It's very straightforward. We're using options as a vehicle for a number of factors. So you can take advantage of whatever the market conditions are, up, down, or sideways. We can control probability, and that's the biggest difference of using options. I get to choose what my probability is. Do I want trades that are 60%, 70%, 80%? I have to balance that probability with risk reward, but I choose. If you're buying or selling a stock, there are some disadvantages. Obviously, you got a 50-50 chance, but the disadvantage is the amount of money that you have tied up, the amount of risk you have, and so forth. So I use options as limited risk strategies. My focus changed when my daughter was born, and I wanted to spend less time chained to my computer in trading the markets minute by minute. I've done that. It's exciting. It's fun, I guess, at the time, but now in retrospect, it's not as much fun as I thought it was. But there's a better way to do it, and I want to be able to have a little bit of a hands-off approach, but have the staying power and the ability to take advantage of the opportunities without watching tick by tick. Increase returns, and again, the staying power is key. The key is to select the right strategy for the markets. We're in a bullish market condition right now. Anybody who says anything otherwise is fooling themselves. There is money to be made on the short side, and if you don't take it immediately over the last 5 years, you end up with nothing. There have been so many casualties here in the last couple of years from those people trying to pick the top. If you don't grab it immediately, what's happened? We've made new highs each and every time. Now, that's not going to happen forever, but right now, we want to be able to select, when you're trading options, select the right option and the right strike for what the markets have to offer. Now, oftentimes people have some reservations about using options because they've heard about these options expire worthless and you need a big move to make things happen. Well, if you're a novice trader and you use what we call in the business lottery tickets, these out-of-the-money options with little time to be right, you're fighting the probability. You've got a 2-3% probability of being successful. Again, I want to be on the other side. I want to have the high probability positioning and then using the right options. So I'm going to show you those two basic strategies here today and how to do that. But just a quick little story. If you come to the exchange here in Chicago, Chicago Board of Trade, CME Group, Chicago Board of Options Exchange, a lot of those guys have made epic amounts of money, have made their living at selling those out-of-the-money long shot options to novice new traders. A novice new trader wants to buy a cheap option when, not buying a whole lot of time. And if something significant doesn't happen in a very short period of time, that option expires worthless. So they understand that, the novice trader understands that in that they're buying more of a lottery ticket. It's more of a gamble. It's not using options for their inherent attributes. They're just kind of taking a shot at it. There's a better way to do that. And understand, those guys that sell those options, those traders on the floor that sell those options, have the best cars, the best houses, because they're using probability and taking advantage of what options have to offer. So let's talk about the simplest strategy. Options are just a vehicle. They're nothing to be afraid of. Most people have learned about investing initially by getting into in their 401ks, selecting mutual funds, investing in mutual funds, then advancing into individual stocks. Now, understanding the advantages of using options on those stocks or options on those ETFs have huge mathematical advantages. There are a couple variables that we can control, and that's the difference. It's not just direction up or down. There are variables of time, of price that we can control, and volatility. Volatility is not a scary word. Volatility is opportunity. As the markets move, that means we've got a greater chance of pulling a piece, a high probability piece, out of that movement. We want the markets to move. Volatility is opportunity. Now, there are conditions where we have low volatility. There are conditions where we have high volatility. I'm going to show you how to take advantage of both conditions and what the markets have to offer. But you've got to recognize what volatility means. And the premise that I gave us at the beginning here, identify, execute, manage to maximize, the maximization of an overall move, the larger the overall move, the larger a high probability slice that we can take out of that larger overall movement in a period of days, weeks, months, whatever your trading style is. My personal trading style is looking for moves in a period of weeks and months. I'm not so much worried about the day-to-day, and I use options so I can look at things on more of a weekly basis and look big picture. Volatility, let's talk about that very quickly. When I started on the trading floor, there was not the VIX. The VIX was not the measurement of volatility. The measurement of volatility was watching the Treasury bonds, because of flight to quality, people would get in or out of Treasury bonds based on how they saw risk increasing or decreasing. They would take money out of Treasuries and put it to work in stocks. Or if it got volatile, they would take money out of stocks and put it back into Treasuries. So you could use that as a gauge. So now there is a volatility measure called the VIX, obviously. Now if you look at the VIX was at 7-year lows back here in July 3rd. has bounced a little bit. Even though the markets continue to make new highs, volatility has made new lows. So that means that the market is not complacent. Now that, to me, you could view that as there's more upside opportunity in the stock market and more downside opportunity in volatility. Volatility is just a gauge, but it's showing us what the opportunities are. And for most of the year, it's traded between 12 and 14. You get these VIX explosions where the market bounces up, but then it gets beaten back down, kind of like whack-a-mole. Every time volatility gets bounced up, it gets smacked back down. Now, somebody's going to say, well, volatility is really, really low. It's lower in relative terms than where it's been last year, the year before that, the year before that, the year before that. But if you go back to 2006, volatility was below 10. So just because, you know, it's where it's at, it's high and low are relative. That's something that you need to know about price. It's something you need to know about volatility. The market doesn't care if it's high or low. Those are human emotions, and that's going to impact your discipline and your ability to recognize opportunities if you've got a deep-seated opinion of you thinking something is high or something is low. The market doesn't care. It can always go a lot higher. It can always go a lot lower. But volatility here, I'm using it as a gauge to help me determine which strategies I think are good for the market conditions. So when volatility is low like this, we could use option strategy, stock substitution strategy, where we're an option buyer. We're an option buyer because options in general terms are less expensive than they were last year, the year before that, the year before that. So they're a better value. So let's talk about that here. Volatility strategies. There's low volatility strategies, like the stock substitution we're going to talk about. And then there's also there are high volatility strategies. Let's look at the stock substitution strategy. Very straightforward. This is how most people learn about options. You're going to be buying a call or a put instead of selling the stock or buying the stock. Very simple. Now the question is which option, and that's what I'm going to talk about here. The benefits of it are you use less capital, you've got less risk, because if you're an option buyer, your risk is limited to what you pay. If you pay $400 for an option, that's it. No matter what happens to that stock, that's the most you can lose. And you can potentially have greater returns because you're putting up less money, but you're going to buy an option that acts like the stock, hence the name stock substitution. You also have staying power to ride through some ups and downs. Now, this big move that we saw in October, the big sell-off, that big unwinding, stopped us out of some positions, but we have some longer-term options at January of 2016, some June options, some longer-term options that were able to ride through the ups and downs, whereas if you had the stock, you were going to be knocked out. So options oftentimes have this staying power that allow you to stick with a position, whereas if you're in a straightforward long or short stock position, you're not going to do so because you have that limited risk. And a good rule of thumb, we'll talk about the money management discipline, is when you're an option buyer, risk half of what you pay. Buy better options. Buy an option for $500, put in a stop loss at $250. Because either, if the option loses half its value, either you're running out of time or the markets move the other way. Those are the two things working against you. So that's a very simple money management rule. I'd rather buy an option for $500, risk $250, than buy a $250 option and risk the whole thing. In general terms, the more you pay, the better, more expensive an option is, the better, the higher the probability is. And it's all about probability. So to get into the basics of the stock substitution strategy here, that each option is standardized. Each option controls 100 shares of the stock. So if you're looking at a $10 stock, you want to buy 100 shares of that, that's $1,000. All right? An option on that 100 shares of stock might cost you $100 or $150 or $200, but it's going to be a smaller percentage of buying the shares outright. So the maximum risk is a premium that you pay. If you're an option buyer, no matter what happens, the worst thing that can happen is it expires worthless. It's an option. That's the key. You have the right but not the obligation to buy at that specific price or sell at that specific price if it's a put. It acts much like the stock and price movement, and the important thing is now we've got liquid markets, so you can enter and exit very smoothly. A lot of these options have penny spreads, so the overall trading cost, in addition to the low commission, is the entry and exit cost of buying at the ask and selling at the bid very, very low. You can execute your trading plan. There's not slippage like there was years ago, and you get that discipline and that money management discipline. So let's get into some specifics with it. How do we do this? Well, I want to use the in-the-money options that are going to act like the stock. They're going to have a delta of about 75%. Uh-oh, I used a Greek word. delta about 75%. All that means, it has twofold meaning, but most people look at it as it has a set. It's going to 75% means that that option's going to move at the 75% rate of what the underlying does. So if the stock moves up $1, the option will move up 75 cents. But more importantly is the delta also, for our purposes, mathematically it's maybe 1% or 2 off, but for our purposes, the delta is also the probability that option will be in the money at expiration. That is the probability that option will be in the money at expiration. Now, we're not saying how far in the money it's going to be, but it'll be in the money at expiration. So I can choose positions that have a 75% probability or higher, 75% probability, as opposed to buying those lottery tickets that we mentioned earlier. Very straightforward. Also, another rule, I want to have my break-even at $1.50 or less away, meaning that I will profit from a modest move in the stock. I don't need the stock to double. I don't need the stock to go up $20. If the stock goes up $1.50 between the time I buy the option and expiration, I'm going to be at my break-even. Anything more than $1.50, I'm making money. So a modest move in the option. And more importantly is I want to buy enough time to be right. If I'm a long call buyer, I want to take time out of the equation. We talked about how people had bought less time, expecting something to happen in the short term. And you know what always happens after your option expires if you're a novice trader. So take time out of the equation. Go and buy as much time as you can because volatility is low, time is inexpensive. You can buy options with 6 months, 9 months, a year of time. And, you know, people are going to say, well, why am I buying a year of time? Because I can, and because it's going to cost me $20 more than buying 6 months of time. For an extra $20, I'd be silly not to, just in case I need it. I don't think I'm going to need it, but just in case I need it. I've got that staying power. I've got that time. I have the ability to hold on for the long term and look for the bigger move by doing things of that nature. So buy more time than you need, and I always use the phrase buy enough time to be right. So you're taking the time component out of the equation, and if my position, you know, gains 50% in 3 weeks, I'm going to take it, even if I have a year or left time. I'm still going to get out of the option. I can get out of it at any time, but because volatility is low, the stock substitution strategy right now is a very efficient way to go after it. And as I mentioned, the money management rule, buy better options and risk 50%. So you buy an option for $800, put a stop loss at $400. If you buy an option for $250, put it at $125. Mathematically, once it gets to that halfway point, anything can happen. The market can come back, but more times than not, you're better off to salvage what you can, clear your head. You can always get back in and take advantage of the opportunities. It's better to be out of the market and looking to get back in than be in the market and hoping that you can get out. Hope is not a trading strategy. So let's get into some specific examples of this, and then, excuse me, we'll talk about some other strategies, a low volatility strategy, but let me just do this quickly. Here, let's look at JetBlue. All right, this was here over the summertime. JetBlue is trading in a range, in a dollar range, and you saw in the candlesticks charts presentation earlier, you know, technical analysis is very valuable in identifying trading candidates. So looking at the chart here, traded in that dollar range with the idea that you could lean on that support level, and if it breaks out to the upside, it's going to see about $1 move to the upside. So JetBlue, inexpensive stock, how do you go after it? The stock was trading at $8.40 May 8th, all right? Now that in the money call. So I could buy a call, a $7 call, which is in the money, $1.40, gives you the right to be long from $7. The market's trading at $8.40. Subtract the difference, it's $1.40. That option was going to cost me about $1.85. All right, so my break even on that is only 45 cents higher. Now, your choice is you could buy the shares, it's going to cost you $840, or you could spend the $185 for the option and then put it in stop loss at half. So essentially you're risking $90. And we're not asking a whole lot. At that particular time in May, it was a January option. So it had June, July, August, September, October, November, December, and January. So that's 8 months of time. So taking time component out of the equation, and the break even was 45 cents higher. Asking JetBlue to move 45 cents in 8 months. Again, not trying to be Nostradamus there, just looking for a breakout, looking for it to move. We had our objective. We knew what our risk was. We knew what our probability was, and we had all our ducks in a row. So as you can see, JetBlue, boom, takes off. The stock moves up to $9.65. That's a 15% gain in the stock. That's a pretty healthy move. That is a very healthy move in the stock. You've got to be impressed with that. From May 8th to May 29th, in 3 weeks, the stock moves 15%. That's a nice move. All right, but if you look at it from an option standpoint, that in-the-money option moved 46%, moved 3 times the amount with less risk, less management, and much greater returns. So that option, which was bought for a dollar, would we say $1.80, sold at $2.70, made a 46% return in a period of 3 weeks. And that was a January option, and that's the end of May. So that still had 7 months of time. But if you make 50% in a couple of weeks, you know, money management determines that you should probably take that. So, you know, down the road, as you become a bigger and better trader, you can, you know, peel some of them off, keep some of the other options for the longer term, and so forth and so forth. But it never hurts to take profit, especially when you get a 50% profit in a period of a couple of weeks. So that's very straightforward. And I hope everybody understands and appreciates the in-the-money option. Now, in this instance, you know, the market moved up 15%. The option moved up almost 50% in 3 weeks. So that's a very, very good use of money management and the attributes of options. So there you go. You can see JetBlue took off. Everybody benefited from that. So to summarize there, the stock gain was 15%, which is still great, but you can increase your returns with options. Less risk, less capital, greater return. And the delta on that option was 80%. Acted much like the stock. So that's what this teaches here is to use options as a vehicle to increase trading returns based on the market conditions. We had low volatility, we had a great chart looking for a breakout, and I was using options as a vehicle. I could have just bought the stock, still would have done fine, but I was using the advantages of options because there are so many of them, and I could watch this on a weekly basis, not worry about the day-to-day fluctuations of the market, look big picture, and take advantage of what the markets were offering as far as that opportunity. All right, let's talk real quickly, and we're going to get into another strategy. Well, what happens when volatility is high? Volatility, again, is opportunity. When volatility is high, there are ways to take advantage of that. And I'm going to talk quickly about the option wheel, the option wheel strategy. This is a way to get into stocks that you want to at a discount or get paid not to. Because there are stocks that have high volatility. There are stocks that have great movement. Now, that could be viewed in a couple of ways. That means they're going to move around a lot, and you're going to have some discipline and going to have some patience, and you're going to have a trading plan to be able to manage those price movements. But this is a straightforward strategy to get into stocks you want at a discount, individual stocks that have high volatility. Now, the key here is these are stocks you want to own. This is a way to build a long-term portfolio in stocks you want to own, a way to get into stocks at a lower level. The idea here is to sell cash-secured puts. Now, you've got to remember that selling cash-secured puts has the same mathematical risk profile as covered calls. So everyone here should be familiar with covered calls. Covered calls aren't scary. You never do a covered call on a stock you don't want to own for the long term, because if you sell a covered call on a stock and you sell a covered call for $2 and the stock goes from 50 down to 20, that $2 you took in isn't going to do you any good. So you only do covered calls on stocks that you're positioned and willing to own for the long term. Now, the same thing with the option wheel. The idea behind the option wheel is to do this in conjunction with your regular investing. This is a monthly revenue plan to generate high probability returns, not big returns, 3, 4, 5, 6, 7, 8% a month. Now on a monthly basis. We're doing this on a regular monthly basis, taking advantage of that time decay and that expiration. Options expire every month. So for those people that buy those short-term options, more times than not, they expire worthless. So I want to be a seller of those options. But I only want to do so in a very, very controlled manner and only on stocks that I want to own at a lower level, and I'm going to show you how we do this. So if you can get 5% on a month, okay, that's not gangbusters, and that's not a home run, but if you can do that with an 80% probability, 5% a month, and if you annualize that, think about that in other terms, that you're generating small monthly returns that will add up, that you can do in addition to your directional trades. And I always remind people, when I tell people, oh, well, that made 3% a month, they're like, that's 3% a month, that's nothing. Well, take the rule of 72. The rule of 72 determines how long it's going to take your account to double based upon your annualized return. So if you have an annualized return of 8%, the rule of 72 is going to tell you it's going to take you 9 years for your account to double. So that shows you that small returns add up. And if you could get 2% a month, that works out to be 20% a year. So think about it in those terms. It's a high probability way to attack the markets, and it's a trick that investment managers use as a way to get into stocks. All right? Investment managers, let's say, wants to get into Tesla, right? Tesla, expensive stock moving all over the place. Well, they could say, listen, I want to buy Tesla when it gets down to 200, or I could sell the 205 put and take in a couple dollars. I sell the 205 put, and let's say I get $5 for it, then my actual entry price is 200. And if it doesn't go down and I don't get put into it, I get to keep that profit. So I just made $500 per option that I sold. So as opposed to putting in a limit order and waiting for the stock to come to you, this is a way to get into the stock at a lower level without that limit order. The limit order is you put in that order and say, okay, listen, I'm going to buy it when it comes down to my price. Well, why not get paid every month if it's a stock that you want to buy and understand that and understand the probability behind it? The key here is only stocks you want to own, only stocks that you're prepared to own for the long term. And this has been done on many stocks that are proper for a portfolio based upon your risk analysis and your personal profile. But think about it. Facebook, when it was down at $20, selling a cash secured book in Facebook, what's the downside? Oftentimes it's in lower dollar stocks because that way you have a limited downside. You're not, unless you're looking to hold a high dollar stock in your portfolio for a long term, you're typically not doing this on $50 stocks or above, or $40 stocks, or anything really above $25 because you want to have limited downside on this, and you want to choose high relative volatility stocks. So I showed you what JetBlue looked like. I showed you what the volatility right now in the VIX is, about 12. Well, in these individual stocks, the volatility is typically above 50 or so. So what that means is that you're getting ample return by selling a cash secured put into the stock. So you're making sure that you're getting that 3, 4, 5% return in a 25 or 30-day basis so that you can benefit from that high volatility. So let's look at an example right quick, and then I'll show you the portfolio there. Here's an example, Sprint. Sprint looks like it has solid level of support. Wouldn't be afraid to be long Sprint from $5 or whatever for the long term. So sell a cash secured put on Sprint. Its stock was trading at $560. Sell the $550 put. If it's above $550 at expiration, it's a 4% return in 3 weeks. It profits not only where the stock goes, but where it doesn't go. So if the stock goes up, you profit. If the stock goes sideways, you profit. Even if it goes down, you profit, as long as it doesn't go down below, go 6% lower based on our break even. The maximum risk is that $530 that you would be assigned long that stock, $5.30 times 100 shares. That would be your cost basis. That's your maximum risk. Now, if you do get a put to you could sell covered calls against it in the future and continue to do that to lower your risk. But the idea is I'm not afraid to own that stock at $530. I'm sorry, own that stock at $5.30. I know what my downside is. I'm prepared to hold it in my portfolio for the long term and be there. Now, Sprint, boom, takes off. All right, takes off, goes all the way up to 671. Well, you know, there was a small return, a 4% return. The only downside is that if we had bought the shares, we could have had a greater profit. But it's about probability. The stock shot up. The stock had a 20% gain. The option expired worthless. We got to keep that premium. We made 4% in 3 weeks. This is something we can do on a repeated basis, month in, month out, on a basket of stocks. I do this on 5 stocks on a monthly basis. 5 stocks every month, and I sell some cash secured puts on stocks I want to own and go from there. So we'll look at the strategy for last month. JCPenney, here's one of the 5 stocks, trading with the range, selling a 7 put, break even was 670, was 9% below. Again, I'm prepared to buy at 9% below where it was trading, or I get paid 4.5% potential return on risk. Boom, JCPenney holds up above the $7. I keep the premium. Alpha Natural Resources, trading sideways down here at the lows, a $2 stock. So a $2 put, the break-even was $1.77, 15% below. I could buy the stock at 15% below, or I get paid 11% not to. Alpha Natural Resources bounced up, $2.54. We could keep that option premium. Radio Shack. Now, Radio Shack's a dollar stock, so the maximum risk is that dollar multiplied by 100 shares is $100 per option sold. Sold the option, break-even was 78 cents. Ended up being at 85 cents where the market finished. So even though it was below our strike, we still ended up profiting on the trade. Not maximum profit, but still ended up making, I think, 6%. We'll take a look at it in a second. Plug Power. It's trading at $5. Got strong support down there at the 4 level, selling the 4 put. Take in 25 cents, 15% return on risk, 7% potential, 15% discount, 7% potential return on risk. Plug Power finishes at 393. Just a little bit below our strike. Had to close out the option or go long the shares, but still significantly above that 375 break even, so still a very healthy profit. Here's an example. Cliffs Natural Resources. Went from $11, sold the $7 put. Look, at $7 is the lowest Cliffs Natural Resources has been in years. Sold the $7 put, had the right to be long from $6.50. All right, 27% below, 27% below, or a 7.5% potential return on risk. So Cliffs Natural Resources finished at $9.91, a full max profit on that. Only stocks you want to own, something that you could own for months, maybe years. And if you do get it put to you, then you sell covered calls on it until you get it taken out, hence the option wheel. Sell puts, get the stock put to you, sell covered calls, get it taken away. It's a mathematical way to take advantage of high volatility in lower price stocks. It's strictly probability. It's a way to generate revenue with a 75-80% probability. The idea, sell puts, get the stock, get paid if you don't, and then sell covered calls and get taken away, and then repeat, hence the option wheel. You're able to buy stocks at a discount or get paid not to. Generate high probability small monthly revenue streams and repeat. Repeat. Identify, execute, manage, maximize, repeat. That's what strategies are all about. That's what discipline's all about, and methodologies, having a plan. Now, I showed you a couple of examples. Here's some examples of some long call strategies in very short periods of time. I'm often looking at weeks, months, and a lot of the positions I have on right now are January 2016, so there's plenty of time. But if you get some profits in the short term, I'm not one to not put them in the bank. So that definitely makes sense. And here's the example of what happened last month in our cash secured put strategy portfolio. You can see we break down the portfolio into stock trades, cash secured puts, and ETFs. And the 5 stocks that we did last month took in some healthy profits: 4.5%, 13%, 6.5%, 4%, and 7%. Those were within, if you look at the entry dates and the exit dates, those were within 3 weeks. So on a monthly basis, 4% on a month is pretty impressive with an 8% probability. It's a way to take advantage of what the market conditions have to offer right now. And that's, I think, an important point here that I want people to understand about the simplicity of options and using options to your advantage and understanding what the markets have to offer. So I've got an option service, if you're interested to look at, Bar Chart Bullseye Option Service, where we employ these strategies and others. But you can see trading is all about discipline. It's about risk control, using the advantages of options, limit your risk, increase your probability, increase your returns using options. The markets can only move 3 ways. There are different option strategies to take advantage of all conditions, and I particularly like the last one we showed, where you're taking advantage of not what the market's going to do, but what it's not going to do in a very controlled manner. A very controlled manner, and understanding it's a way to get into stocks that I want to own at a lower price. Good example of that right now has been BlackBerry. BlackBerry's got really strong support at about $9. Selling the $9 puts in BlackBerry for December. Great trade, in my opinion, because I want to get long BlackBerry at a lower level, and this is a way to do that. And if I don't, I get paid. And then next month, when the December options expire, if it expires my favorite, I get to keep that premium. Then I sell it again in January. Then I sell it again in February. And I'm making a little bit of money every month in the meantime, waiting to get it into a stock that I want to get long. You don't need to use the fancy math. You want to make options ridiculously simple. And most important, I think, is with people's lifestyle, these markets don't require constant attention. We know our worst case scenario. We know what's going to happen if the market moves for us. We know what happens if the market's going to move against us. And to get back to that cash secured put strategy, we have the money in our account to buy the shares of stock. So that's not the question. So either we're buying the stock at a discount or we're getting paid not to. Neither one of those scenarios is not fantastic. I love both those scenarios. So we don't need to watch the markets. We look at the markets at expiration, and we either going to get the shares or we're going to keep the premium. That's it. That's it. So that's one of the strategies. With Bullseye Options, you get the trade recommendations, get sent to you email and text. You're also getting a detailed explanation for each one of the trading alerts. They get into the risk reward, understand why and the hows of why I'm looking at that particular candidate. Identify, execute, manage, maximize, and looking at the sector, looking at the macro view, looking at the sector, looking at the individual opportunity. Very detailed explanation of why that trade was picked. You'll also see I showed you the online portfolio that you'll be able to keep track of each and every position that breaks everything down into risk rating, what the targets are, the probability, and again, that little trick, you understand that your delta of your option is the probability that that option will be in the money at expiration. So you get to choose your probability. You're going to get email updates, a weekly recap of all open positions that I send out on Sunday, and an educational 1-hour webinar every week. You get to ask questions. You get to look over my shoulder. I'll tell you what I'm looking at, what I saw from last week, what I'm looking at this week, how I'm looking at our positions, where I see the opportunities, and so forth. So it's a chance to look over my shoulder and get a feel for how I'm viewing the markets. I don't have all the answers, but I do have discipline, and I know how to take advantage of what the markets give us. So you can get a 14-day trial. You got barchart.com/bullseye. If you want to put that in the trading window, I'd appreciate that. So you're going to get some trade alerts over the period of the 14 days. You're going to get, obviously, 2 1-hour live webinars, see what I'm all about. You're going to get the weekly updates. You're going to get a lot of this information to see how we approach the markets and take advantage of whatever the markets have to offer. There's always opportunity, and that's what's most important is, like I said many times before, the markets aren't good, the markets aren't bad, they just are. So please sign up for the 14-day trial. Get a little bit better feel for what the markets have to offer. Someone asked if I've written any books. No, I've had a lot of friends that wrote a lot of books, but it's not something I've really put pen to paper and do. There's only so many option strategies. There are 21 option strategies, and there's really about 14 that are applicable to a retail trader. And it's more about the discipline. It's more about the mental approach and about the psychology. If I do write anything, it's going to be on psychology. My father's a psychologist, and I realize it's more about understanding you and the markets than the techniques. The techniques are what they are. Trading is a methodology. Trading is straightforward, but understanding yourself and the emotion is probably the most difficult thing to do. So the service costs $99 a month. If you pay for an annual, you're getting the annual subscription for the price of 8 months, so you get a major discount there. And right now the prices are at a discount. So if you have any questions, let me answer those. What's your service normally cost? $1 million. That's funny. I like that. I like that. So give it a try, see what it's all about, get some additional perspective and a different outlook on the markets. And these are 2 examples. Like I said, there are about 14 different strategies to take advantage of what the markets have to do. But right now, things are very straightforward. You don't have to be complicated. The markets are doing what they're doing. And until that changes, these are pretty straightforward strategies. Let me just see what other questions we have here, and I'll be happy to answer them. But if we could, Fausto, if you could put in our link, I would appreciate that. And let me stretch out my question box here. Does this work with ETFs? Definitely. That's one of our sections that we broke it down, and we break it down that way for a couple of reasons. People that trade have different risk tolerances, levels of experience, and different account sizes. So ETFs are a huge part of the marketplace, and I think they're the greatest vehicle that's been created in the last 20 years, because you can use them to focus on a specific sector or index, or you can use them to focus on dial in on a specific commodity or oil or copper or coal or so forth. So you can be very targeted, or you can use ETFs in the fact that you're getting an index that doesn't have individual stock risk, so that you're trading something like XLF, which we have a position in. XLF just made new highs. The financial sector. You're trading a whole basket of financial stocks as opposed to just trading JP Morgan, because if something happens to JP Morgan, then it could have a negative impact on your portfolio. So ETFs, you can sign up for your trial anytime you choose. What do you consider high volatility? The high volatility for those individual stocks is usually volatility of 50% or higher for those individual stocks. And when you do the calculation, your return on risk, you typically want to have a return on a monthly basis of 3.5% or more to make it worth your while, in my opinion. So I use a simple benchmark. What is the 10-year note doing? All right, the 10-year note's sitting around 2.5%, actually below 2.5%, 2.3%, right? So I don't want to sell a put where I'm only taking enough money that my return on risk is only 2%. I want to make sure that I'm selling a put in a stock I want to own and make sure I'm getting 3, 4, 5, 6, 7. I was showing you some examples of 8 and 10% because the volatility, if you looked at that month, that was when the market had gotten smashed. So when the market gets smashed, that's a good thing. You're making lemonade out of lemons. The market's getting smashed. People are losing their minds. Volatility is spiking. Guess what? You're selling volatility on stocks you want to own. Okay, if I had to buy those stocks at a discount, so what? But you're taking advantage of that heightened volatility, using that in your favor. So you're making lemonade out of those lemons. So that was a absolutely ideal strategy when the market was getting smashed like that, as a way to get into stocks that we want at a lower level. So 404 error for the website. All right, let's just go to, let's see here. Let's change this up. Just type in barchart.com/bullseye and see what that gets us here. All right, so someone type that in and let me know how that goes, and we'll get everybody up there. Where can I find penny optionable stocks? I don't understand. Website works okay. I don't understand. Are you talking about penny stocks that are optional, or stocks options that are in pennies? So I don't understand that question. So someone says the website works fine. Thank you very much. I appreciate that. Please sign up for your 14 days, and I will have you in my weekly webinar and answer your questions. So to get back to the high volatility, above 50%, you want to make sure you're getting 3 or 4 or 5% return on risk in a 25 to 30-day basis, because that's the time decay curve. That's when the options will melt, and that works in your favor. So every day that the market doesn't go against you, the option loses a little bit of value, a little bit of value, a little bit of value, and then it expires, and you get to keep that premium. Does it work for ETFs? We answered that question. Bar chart. Yes, there's not bar charts. It's bar chart. Bar chart. So someone asked me what the service costs, $99 a month. People ask me, well, what size options when you're looking at long calls? I showed you an example of an inexpensive option. I showed you the example of JetBlue, where the option was only a couple $100. So you're risking half of that. There are options that are going to cost a little bit more money. If you're trading options on Facebook, just put on a Facebook trade last week. The option was, I think, $1,000. So if you're not risking $1,000. You're putting in a stop loss at half. You're risking $500. So there are options that are more expensive. But again, the idea is to have a consistent dollar amount that you're putting in on each and every trade. So your trades are weighted fairly and equally. So if you're putting $1,000 in each and every trade, with the Facebook option, you need to do 1. And with the JetBlue option, you do 5. And that way, each one of your trades has the same dollar amount at risk. It's all about percentages. It's all about weighing things properly. Someone asked about the slides for the presentation. It is recorded. And let's see what other questions we have here, because I just have another couple of minutes before it is over. Please sign up for your 14-day trial, barchart.com/bullseye. I'm Alan Nuckman, Chief Options Strategist for BarChart. Let's see what other questions we have. But I look forward to having you with this. But the key here is, let's use options for their advantages. Take advantage of the time situation. In the first strategy, we're buying more time than we need. taking that component out of the equation, using it as a stock substitution strategy. The second strategy, we're selling a short period of time, knowing that those options are going to decay, and either we get into a stock at a lower level or get paid not to. It's a hands-off way, a limited risk way with staying power to give you better payoffs and to make your life easier. That's what it comes down to. So that's it. Thank you very much. Hope to see you soon. And please go to our link, sign up for your 14-day trial, and I will see you in my webinar next week. Thank you very much.
Thank you very much for that, Alan. That was a great presentation. To find out more about Alan's great offer, go to barchart.com, bullseye.vegas. Sorry about that. That was my error. I put the S at the end of it. So I fixed it so everybody's up there. And like I said, listen, everybody here has to learn a little bit from everybody. Hope you learned a lot within that 1 hour. But just always remember, everyone, you're never going to learn something in a day. You're not going to learn something 5 days. Sometimes it takes 2 weeks to really know what's going on. And always judge people not on what you see on the first day, but over the course of the period. So get that opportunity to get Alan's great offer. All right, in the meantime, ladies and gentlemen, let me just hold on 1 second. Just take this away from him. Here we go. All right. Just want to take over the screen from him, and then just give me a second here, and we'll get started about another minute. There we go. All right, so want to touch really quick on the next promotion. All right, so the next biggest thing we're going to be doing is I am going to be giving away the trading computer. All right, so if you do want to get more raffle tickets, it's your last opportunity to share it with your friends, tweet it, like us on Facebook. The more you do it, the more chance you get to win. We're going to give it at the end of my presentation. We're going to pick out a winner. All right, so if you haven't done it yet, I'm going to give you the link right now so you can go register right now for that link. By the way, everything that you want to find that's going on for today, just go right to Cyber Trading University's homepage. Let me just bring up that screen for you. Should be coming up in about a second or so. And on the bottom right-hand corner where it says Quick Links, if everybody could see that, you'll see Steve Bigelow's promo, you'll see Alan's promo, you'll see everyone that is offering any events is going to be under Quick Links. And like I said, if you do want to register and get that opportunity for that, win that computer, I'll just post the link up there one more time for all of you. There we go. All right. Now, does everyone see the screen okay? Just one last question before everybody can hear me loud and clear. Can everybody hear me? Okay, good. Just want to make sure. All right. So once again, my name is Fausto Puglisi, President and Founder of Cyber Trading University. Wanted to talk about, I got one last promo we're going to give. We're going to give away my book, okay? But before we do that, I want to give the announcement of who won before, okay? The answer was, the question that we did before is, what was the cause, who was responsible for the flash crash? And the answer was Wendell and Reed. It was a $4.1 billion trading blame for the market plunge of for the flash crash. That was the fat finger of what happened. So for everybody there, that's the answer. And the winner was Clement Marid. He won. He called in. All right. Now, before I get started and talk about my and take over my presentation, ladies and gentlemen, I got one more promo I'm going to give away. I'm going to give away my book. All right. And what this is going to be the question. All right. And then right after this, when I'm done with my presentation, Tom Buzz is going to come in and we're going to give away the good trading computer from our friends at tradingcomputers.com. All right. So who here has Facebook? The crash was in 2010. Everybody have Facebook here? Okay. If you don't, okay, you can call in, but what we want you to do is the one that can go on, we're going to give you 5 minutes to call in, but the first one that can put the answer of the next question on our Facebook page, okay, is going to win, all right? Is going to win my book. Now, this is the question. Now, listen carefully because it's going to be a tough one, all right? And it's a fun one. We shared with the office and some of the other speakers. We said, what do you think would be the best question? I think this is the best one. All right, everybody ready? What was the lowest point that the S&P 500 hit during the financial crash? What was the number, the lowest point, the number? Okay, so what you need to do is go to our Facebook page, all right, and whoever puts it up there first, go to cybertradinguniversity.com, whoever posts it on Twitter, on our Facebook page, whoever's up there first wins, all right? So once again, the question is, what was the lowest point that the S&P 500 hit during the financial crisis back in 2008? All right, so I see a bunch of you, JD and everyone else, just go to Facebook.com, go to our Facebook page and post it up there. I thought it was a pretty cool question. All right. So let me just get a little organized here, ladies and gentlemen. Let me bring up my PowerPoint and we're going to get started. All right, just let everybody know. Can everybody let me know if you could see the screen okay? All right, perfect. All right, so let's get started. So once again, ladies and gentlemen, my name is Fausto Puglisi, President and Founder of Cyber Trading University. I'd like to thank you guys for being here. And once again, like I told you, do not log out because we are maxed out. We had over 7,000 people that registered for this event. Only the first 1,000 were allowed to get in. If you log out, you can't get back in. There's a whole bunch of people that we only are capped at 1,000. So some people are still trying to get in. So if you do, you lose your seat. So please stick around. Don't log out if you want to see all the rest of the events. My topic, ladies and gentlemen, today is using high-frequency trades to level the playing field. Now, for some of you, a lot of you here heard Norman Hallett talk about journaling. I'm going to talk a little bit about that. You heard Bigelow talk a little bit about charts and his candlesticks. I'm going to talk a little bit about that. You also saw Alan talk about options. I'm going to talk a little bit about that. But you know what? It all comes down to one thing, following the money. Okay, so what I'm going to do, ladies and gentlemen, I'm going to tell you a little bit about what high-frequency trades, how important it is, and why you need to understand it to be successful, and obviously understand how the market works. So let me go out there and let me trade, and let me show you. Let me just change the slide here and get started. First of all, things we're going to be covering, ladies and gentlemen, things we're going to learn. What is high-frequency trades? Why brokerage firms will not offer you. Meaning things that you need, when to use level 3 total view, where to get the right data, and much, much more. These are the great things we're going to be talking about for the next hour. Now, for some of you, just to talk a little bit about Cyber Trading University, first of all, this is the Cyber Expo, the Cyber Spectacular. We do it once a year. And, you know, you can see with a great audience of guys and loyal students that you've been here. We'd like to thank the partners and all the other speakers helping marketing, getting you guys here. But you have to understand the most important thing is the reason why we're here is because we love to teach people. We want you to be successful at it. And every single one of you here, you know what the greatest thing that I learned, and I listened to every one of them that I learned? Everybody was a failure when they first started. Every single one of them. You heard Steve Bigelow said, I was the worst investor ever, probably the worst out of all of them. And now look at him. Now he's a great trader, and he'll tell you himself. And we all made the same mistake, and this is why we want you guys to learn and do it right. Because we learned the hard way, and the hard way is losing money, and the hard way is once you have bad what's that word I'm looking for? Bad habits, then it's hard to break them, and then we all end up going back where we really learned how to trade, and that's becoming something to do with the market. If we were a specialist, if you were a floor runner, if we were market makers, we all did it. Now, up there you could see, ladies and gentlemen, that was a couple of months ago. I rang the closing bell. On the New York Stock Exchange, right in the middle is Steve Forbes. Actually, that was the first time he rang the closing bell also. Great guy, great financial guy. I was always saying, I said, Steve, why are you so happy all the time? He goes, well, if you were me, you wouldn't be happy. You know, how much he worth, like a gazillion dollars? He wrote a big article regarding on Forbes about a bunch of kids tormenting Wall Street. That actually was the first thing I was talking about, the winner, about who was the godfather of day trading, and that was Harvey Halkin. That was a big article that was written. He actually took that picture at one of their offices. But over the years, ladies and gentlemen, I love to trade, and the thing is, We don't want you here. All the speakers don't want you to lose money in trading. It's the biggest failure rate of the industry. Now, if anyone is interested, the book, if you didn't win the book, if you want to buy it, I'll tell you at the end of this presentation, but it's the first day trading book that hasn't been out in over 20 years. Wiley just came out published with it. I'll tell you how you can get access to it at the end of this presentation. Also, for some of you who don't know, I'm a 12-time champion at the Traders Challenge. So the thing is this, ladies and gentlemen, why was I also a failure rate like every other speaker here telling you, and maybe like a lot of you, is because I was ignorant. I was a kid that didn't want to learn and didn't want to listen, so I learned the hard way. And the hard way was blowing up my accounts. Okay, you think you were a bad trader? Listen, I was beyond bad. I was really, really, really bad because I was that type of guy that just didn't know what to do. And I was just ignorant. And not only that, I was being cheap. I didn't want to spend the money and listen to anybody. And then my only excuse was, let me think about it. My other excuse was, let me try it. If I like it, then I'll learn. Well, this is the greatest slogan that I learned from my mentors. Okay, we need to learn before we could earn. Okay, so if you want to earn money and you want the best career in the world, which I believe trading is, this is the best job. Hands down, there's no other job that pays more money with less education than trading the markets. Okay, actually, you can make more money being a doctor, lawyer, whatever they are. You could do a lot more in the financial market. And you know what? Every single one of you here are going to be trading, because if you're trading your IRA or you're sick and tired of giving your money to mutual funds, you're hearing it all day. I mean, you're seeing the Dow's going to break 18,000. Why? What is it? What's the height? Well, that's why you're here. So the thing is, let's learn before we could earn. So this is why 70% of the traders fail. Okay, now you don't want to look like that guy, okay, with his head, because some of you probably know what I'm talking about. But you have to remember, trading is not investing; it's a job. I know every single one of you here have a job. Okay, now I always tell people, do you enjoy waking up in the morning, being a trader? I mean, think about it. I mean, if you don't enjoy waking up and going to work in the morning, then that job is not for you. Okay, if you're late going to work, then you know what? Then you don't have respect for your job or your boss. That job's not for you. But every single one of you I know here love trading the market, okay? And you look forward to it. You watch it every night, and that's why you're logged in today. But you know what? Why 70% of the people fail? Because they don't want to learn how to do it right. So what I'm going to do right now, ladies and gentlemen, and thanks to the staff of Cyber Trading University, this is the reason why we had you here today, to listen to all the speakers, to kind of get a feel of what you know, because to me this is like a big interview. Okay, you're listening, you're learning, and now you're saying, okay, you can always learn a little bit from him, you can learn a little bit from him, a little bit from everyone. So how do we do that? Well, mistakes that I find is people open up brokerage accounts with the wrong brokerage account. All right. Now, like I just told you early in this presentation, why a lot of people lose money? Because they want to try it first. Now, I look at you as my children. I tell everybody that. Okay. And you know, I'm your parent, and you're the child, and you want to go out there, and you know, you want to drive a car. Well, guess what? If you got into a car without proper education, you're going to crash, maybe even kill yourself. Well, that's what people do. They want to go out there and they want to trade the market, and they open up the wrong brokerage account, and they end up getting the wrong tools, the wrong bells and whistles, and they don't know what to do. They're just making big mistakes. Now, I could tell you this, 80% of you here have an account with the wrong brokerage firm, and even if you do, you probably have the wrong tools on the system. Now, every speaker here, you're going to notice we use some of the use some of the best platforms in the industry. But the thing is, to have a good platform, you got to have somebody to give you a good layout. So the thing is, you got to be very careful. But I don't know if you guys know this, but online brokers trade against you. Okay? Does anybody here know what payment for order flow means? Payment for order flow. Anyone know what it means? Wayne, John, Mike, everyone's saying yes. Who doesn't know? That's right, it's commissions. Brokerage firms, what you're doing is you're sending them an order and they're selling it to somebody else and getting paid for it. So here you are thinking like, I'm getting a great deal. Oh, because this is the first thing people always ask me, Fausto, who's the best brokerage firm? Who's the cheapest? Why does everybody keep asking what the cheapest? How about who's going to give you the best execution? Okay? Because when I used to trade, I used to pay $20, $25 a ticket. Now I got people arguing, well, I went from a $6 ticket to a $5 ticket because that one was cheaper. Okay? Meanwhile, if you like dealing with public transportation, then go right ahead. But at the end of the day, we all know driving a car is a lot more money. It's the same thing when you're dealing with direct access. So the thing is this. Sergi says, I paid $3,200 in commissions last month. Well, listen, there is a way to fix that problem, okay? And the thing is, first you need to learn and see what kind of trading do you like. And then, because every single one of you are case-by-case basis. So please, just like Alan just told you earlier, he's on CNBC, he's on TV once a week. Don't look at Alan and say, don't watch the TV all day because you'll get brainwashed, because the way the commercials, you're going to see some great commercials and might open up an account with them. Those ain't the companies you want to learn from, because it's not about cheap tickets, because to me a cheap ticket is like this car right here. Oh, great condition. You're smarter than that. But some of us don't know the difference. So rule number one, do not open up a brokerage account. Okay? Let's learn and find out which markets we like, and then and Cyber Trading University or your mentor, any of the mentors here will tell you which one would be best for you. So the thing you got to remember is sometimes you want to take matters in your own hands. So basically the thing you have to understand is that you can actually have a seat on the floor of the exchange. You could become a market maker. You could trade. I mean, look at all those people on that photo. Where are all the traders? They never, ever, ever allowed anybody on the floor of the exchange. Okay, why are they down there? Because guys like people like you are replacing them. You don't need them anymore. You could do these trades on your own. Think about it. You were kept hostage your whole life that you had to deal with public transportation. Now you can get your own driver's license. You could drive. See, when I first started, I wanted to be a trader, but I was not allowed. I live here in New York, the financial capital of the world. They wouldn't let me in there because my dad didn't know his dad was the head of the trading department. It's a very exclusive private club. Okay, but now the exchanges took that away, and now you guys have access to it. So you have to look at it, ladies and gentlemen. One of the greatest things out there when you're trading these systems is that you can do it, but you have to learn how to use the system first, and that's one of the things you got to look at. So there's a lot of execution systems out there, and the thing is, a lot of it could be very busy, very overwhelming, but what I'm going to do right now, ladies and gentlemen, I'm going to teach you right now the art of trading, what you need to learn, okay? How does a small retail trader, okay, question from John, how does a small retail trader become a market maker? Simple question, John. I'm going to show you in about 5 minutes, okay? Because every one of you can be. But the problem is everybody, John, thinks that there are other tools out there, like when we look at these charts and you start getting overwhelmed, and next thing you know, you start looking like this baby scratching your head and not knowing what you're looking at. You see, you don't want to be a lagger, you want to be a leader. And this is how we become a leader. We keep things very simple when it comes to a chart, but most importantly, we need to follow the money. So let's talk about what Norman Hallett talked about earlier, journaling. All right? I want to talk about journaling. Now, who here journals? Anyone here journal your trades? Anybody go out there and journal, monitor your trades, what you bought, what you sold, what you got in, got out? Because if you don't, this is a very, very big failure rate. Now, the thing when it comes to journaling, ladies and gentlemen, when you journal, you basically, what you're doing is you're managing your trades, you're learning from your mistakes, why you're getting in, why you're getting out. Now, what I like to do is, I think everyone has my email address, okay? And I'll post it up there again, but faustop@ctucorp.com. Let me put that in there. Does everybody see my email address under chat? Okay. If anybody's interested, I'll send you my journals, okay, or a copy so you could a template. But basically, the thing that you have to learn is you need to understand why you bought a stock, why you sold it, who you bought it from, where you got in, where you got out, And not only that, not just on a day journal, but also on a monthly journal. Now, another thing we offer here at Cybertrain University to our students, and and next week, by the way, I'm going to teach you how to use this. If anybody wants to come and join me next week, I'll tell you at the end of this presentation. I'm going to be doing a startup course that's a startup a gold course that's coming up next week, and I'll tell you guys a little bit more about it at the end of the presentation. But I'm going to teach you how to do monthly journals. Okay, how to get in, why you're making money, why you're losing money. The thing is this: you're not going to learn how to trade in 5 days. You're not going to learn, Saturday, today. You're not going. It's impossible. But the thing is, what you need to know is you need someone to teach you how to play the game. And when you're playing the game, you need to know how to journal. And you need to see, what is your winning percentage? Are you doing consistently? Okay. So the way I use a monthly journal versus a daily journal is the daily journal, what I teach you what to do, is you're supposed to just monitor how you're doing over the course of the day to learn why you bought that specific stock and why you lost on that specific stock. And the monthly journal is something what you do is by progressing, okay? Are you meeting your goals every day? How much you're making every day? Are you consistently going up or are you consistently going down? Usually if you're going down, that means you're trading too aggressive, and you're just not playing in a way of with discipline. Maybe you're trading something's too risky. Maybe you're trading things a little too fast. One thing that I teach at Cybertrain University, I teach you stock levels, level 1, 2, 3, 4, 5. Some stocks are faster than others. You need to know how to control them. Remember, we're here to make money for the day, so that's the thing you got to look at it. So if anyone's interested, I'll give you my email address. I see a ton of emails coming in right now, but next week I'll teach you how to use it. Okay, and not only that, but on the Cybertrain University website, one thing that we did is in the next couple of weeks, instead of working off on a template, we're going to have it on our website so you can log in and it will calculate you. And what's great about the reason why we do that is because our instructors at Cybertrain University, we do a lot of coaching, so we're able to monitor and manage and see what you're doing, so we can coach you as you're going through it. Something that we find that we get a huge request for. So that's the thing about journaling, and that's what Norman Howell was talking about, and also Alan was talking about. I know Tom Busby, who's coming on next, going to talk about it. Let's talk about timing during the day. Okay, so timing during the day is another critical thing. Now, I know it's going to sound crazy. Okay, I tell everybody this all the time. Okay, but I started when I was 22 years old. All right, I was semi-retired at the age of 24. Okay, I was making 7 figures trading. Now, the reason why I got into education is because it wasn't too healthy for a 24-year-old to be retired. And that's why I got into the education business. Now, the reason for that is that the education that I was trained, that my mentors told me, and they said, listen, it is very, very important that you understand that trading is a part-time job. This is not a full-time job. Okay, I want you to understand that. It is a part-time job. So once you learn how to trade, you're going to need to do something else. And that's what we teach you at Cybertrain University. For one of you, and if anybody's interested in the clock, I designed that clock to kind of tell you when you got to get in and when you're going to get out. So the thing is, when you're trading, ladies and gentlemen, you have to be very, very careful, but there are very exclusive times when to trade. And it's the first hour and the last hour of the open and then the close. Now, for some of you, has any of you guys ever traded pre-market? I know we have a lot of students in here that traded also. But anybody here ever seen? I don't know if anybody has watched me trade, but I kind of teach people how to trade in pre-market. Okay, that's like the VIP area of when you get to see all these orders. Okay. Now, I don't know if a lot of you here could trade pre-market. I know a lot of you can't, but I will basically teach you the pre-market trading, and we'll see a lot of those orders happen early in the morning, which gets us prepared to trade right at the open. Now, remember what I told you earlier. I am only here to make money. Okay, I don't care what the company does. I don't want to know what the company does. I know Alan was talking about JetBlue, and I said, listen, I love JetBlue. I actually own it as an investment, but I wouldn't day trade it. I mean, only certain times. Well, the last week has been a great day trade, but there are reasons why you pick one stock versus the other. Have any of you guys ever seen stocks up 20, 30, 50% up in one day, 100% in one day? Have you? Anyone ever see that? How often? I could tell you this. Mario has. Mary, you haven't? Richard, you haven't? Well, how about this? We see it every day at Cybertrade University. And not one, several of them a day. And I'll also invite you to come join me in my professional trading room where myself and all my students trade live. We do this every day. Now, why these stocks are up, I'll talk about them in the next few minutes. I'll show it to you, but the one thing I want to clarify is that timing during the day is very, very critical when it comes to trading, okay? This is where you make your money. And this is why I got into the education business, is because if you're just trading an hour a day, that's all you really need. And just like every other speaker here will tell you, and Alan was mentioning it earlier, Alan brought it up earlier listening to him. He goes, you shouldn't be watching CNBC all day. He's right, because what are you doing watching CNBC all day? You should be going, you should trade in the morning, watch what you need to see, and go enjoy your life. I mean, how many of you here are on Social Security or retired? You think you want us to go back to work 8 hours a day? Are you kidding me? I mean, you worked your life, you made your money, but what you do want, you want passive income right now, because maybe Social Security is not paying enough. Maybe you're just looking to make a couple of $100 a day. Not bad for a couple hours, and that's why you're really here. And the thing all the speakers kind of preach is that 10% of your time is only spent on trading. 90% of your time is spent on education. But if you already learned it, then guess what? You got all that time on your hands. So some of you, yes, you still got a full-time job coming ahead of you. And it's not trading, it's learning. Okay, and that's why you're here on a Saturday. But just keep in mind, ladies and gentlemen, when you're done, once you learn, then you're going to earn. And then you'll have all that free time on your hands. That's why I love trading. That's why I love teaching, both of them. And every other speaker here also in the same. All right, so question for everyone. Paul says work sucks. I mean, Paul, and you know what, Paul? The greatest thing about trading, you are your own boss. You don't have anybody to tell you what to do. You could do it in your pajamas. Actually, a funny story, my wife actually was so overwhelmed and so impressed with trading and seeing it over the years, she's actually coming out with a clothing line for traders. We're going to come out with pajamas, trading pajamas. So you can trade in your pajamas. It's called Trader's Couture. It's going to be coming out soon, so it's going to be pretty cool. I know a lot of you are laughing. Yeah, it's going to be great. Listen, why can't us traders have clothing lines, right? Have great slogans. Sews me out. Hit the bid. All those great things. Oh, it's going to be great. You guys are going to love it. And the design, the layout's going to be great. But the thing is, this is what you want to think. You want to know that you can do this at home. You can trade in your pajamas. You can go golf, and enjoy the rest of your life. So that's that, ladies and gentlemen. Let's go into the more fun part of trading. What I really want to show you is high-frequency trades. Okay, so question is, how do stocks go up and down? How do stocks go up and down, everyone? Can everybody answer that? You should all be able to answer that. Don't be shy. We got, thousands of people listening in. Come on. Supply and demand. Okay, S&D, right? Supply and demand, supply and demand, supply. Everybody write S&D. Don't be scared. Nobody's going to pick on you. Come on, John. Bill, Mike, Mary, Dennis. There's 1,000 Dennises here. All right, good. Supply and demand, all right? Good. So how do we follow supply and demand? We follow the money. So how do we follow the money? Something called level 3. Okay, does anybody here know what level 3 is? Anybody ever heard of it? Total View, Archipelago, ECN book? No one ever heard of it. Only a few of you. David heard about it. Ron says, you bet. Mary says, yes, I have. Andrew said, I only heard of level 2. Kurt says, I have absolutely no clue. Doug says, since the gold course. Okay, well, Doug, listen, it's great to see you coming and being here and supporting Cybertree University. All right, so let me teach you exactly what this is. All right, let me get my crayons out here. All right, so you can see my little pointer right here, right? Okay, so on the left-hand side, these are the buyers. On the right-hand side, these are the sellers, okay? These are the amount of shares, this is the price, and these are the amount of orders that are out there, okay? So the thing is this, when we trade in the market, we all said stocks go up due to supply and demand. So what we're looking at, we're seeing how many orders are on the bid and how many orders are on the offer, okay? So that's going to give our indication of supply and demand. If there's a demand, there's buyers. If there's a supply, there's sellers. So everybody here know how to read a chart, I assume. I mean, I know, you know, Steve gave you a good lecture in educating you on charts. So let's kind of do a basic chart. All right. Looking at this stock right here, ladies and gentlemen, you can see the stock is right there, hit a resistance, at a support. Looking at the stock right now, can everybody tell me, what do you think the stock's going to do? Is it going up or is it going down? Let's see if you guys can figure this one out. Let's have a little fun. Up or down? Okay, we're getting a few people are saying sideways. We're getting a lot of people saying up, some of you saying down. Okay, well, how do you know it's going up from looking at the chart? Brian says we don't have enough information. You're right, I agree, because the one I'm going to give you is going to tell you that. Lower lows, it's a breakout, okay. Close to the high, previous high, okay, good. All right, so let's change the slide here, all right? Let's have some fun. Okay, so we see the support, we see the resistance where we're at, okay. Now, we mentioned earlier the way stocks go up and go down is due to supply and demand, all right? So if we have a demand, we should have a lot of sellers out here, right? And we only have 2,000 share sellers. But we could see the stock is breaking out, all right? So it kind of broke out. And the reason why it broke out is because there's a 75,000 share buyer out there. Now just think about it. 75,000 shares. There's a bidder out there. If that buyer went out there and executed all these sellers, what do you think is going to happen to the price of that stock? It's going to take off. You see? There you go, Mario. It's definitely going to shoot up. That's right. David says it's going to shoot up. Because, once again, how do stocks go up and go down? Supply and demand. So what do we have here? Do we have a supply or do we have a demand? What do we have? We have a demand, right, everybody? Good, good. We have a demand. So now when you look at a chart and you're sitting there scratching your head and you're like, well, why is that stock breaking out? Is the Fibonacci, is the 200 moving out? No. At the end of the day, ladies and gentlemen, it's the orders that make things run. Now, that is what makes these stocks go up and go down. Now, by seeing those big orders, that's what's going to give you an indication of when to get in and when to get out. Now, a couple of people coming across here telling me, saying, how do you know those are real orders? Well, first of all, I don't think a brokerage firm will let you put a fake order out there, okay? So there's no such thing, Jim, you know, as fake orders. You can't. Try to put a fake order with a brokerage firm. You know what they're going to say? Yeah, no problem. You don't have enough money in your account. Okay, so that's number one. Number two, if you think that's fake, because this is the funny story is, I'm going to tell you a really funny story. If you think it's fake, next week when the market opens up on Monday, I'll be happy to show you if they're real or not. Okay, can they cancel those orders? Of course they could. You could cancel an order, but that order is not made by one person. That order could be made up of 30 or 50 people. Okay, that's not one order, ladies and gentlemen. That's multiple orders. All right? So the thing is this. If you don't believe that they're real, I totally respect your opinion, And guess what? I'll be happy to prove it to you tomorrow on Monday when you come join me for my live trading. If you want to come and see me trade all day, I'll show you these live orders all day long. But the thing is this, this is what makes these supports and resistance levels. Because, you know, a lot of you guys are out there, you're reading a chart. Well, I mean, let's play a spade. What makes a support resistance level on a chart? Can any of you guys tell me? What makes a support and resistance levels on a chart? Everybody who knows how to read a chart, I think that's the first thing. Mary says people. Orders. Supply and demand, buyers and sellers, right? So do you see supply and demand on a chart? Does a chart show you supply and demand? No, it doesn't. But level 3 does. The level 3 is the confirmation of those of that support resistance. So think about this for a second. If you know how to read a chart, and if you can get confirmation if those orders are still out there, because you don't want to know what happened in the past, because it's not indicative of the future. You want to be able to predict the future. You want to know if you go into resistance, and this is where orders come in. We call these iceberg orders here at Cyber Trading University. Iceberg orders are these orders that you see going out there as bids and offers. Now, what's the difference between level 2 and level 3, is he saying? Huge, about 20 times more data. Level 2 only shows you the best bid and best offer. Total view shows you all the bids that are out there and all the offers. You got that? Huge, major difference. Okay? David, like I said, if you come join me next week in my live trading room, I'll show you where to get it and how to use it. Okay? But the thing you got to look at, David, and everyone else here, you have to understand something is, did a light bulb go off? Did anyone get a light bulb? What was that light bulb? What did you just learn? 100-watt light bulb went off for G. Izzy's saying, and I like what Izzy just said. I follow the money. You see, when I started, and I lost so much money in the market, and I'm fortunately living in New York, my dad says, son, listen, if you want to be successful at something, there's only one way to do it, he told me. You have to surround yourselves with people that are the best in the business, okay? Period. How many of you here wanted to work for a specific firm or a specific company, but you just didn't, you couldn't get in there because you weren't good enough? Well, guess what? You have the opportunity now to get into a business and surrounding yourself with the best people in the industry. And when I did that, I realized the light bulb kicked in. I'm like, you know what? I deserve everything that happened to me. When I lost all that money, I deserved it. How could I not follow the money? Because that's just plain old ignorance. First of all, I didn't even know that data was out there. Back then, I know we have some old traders in here. Back then, we used to call it Instinet. If you read any of the old books, it's called Instinet. It's an Instinet machine. That data was available. It's where the institutions traded. Well, guess what? Now that data is available to you. Okay. As of right now, for stocks, yes. If you forex, if you deal with our forex instructor, you actually can get it towards forex also. Okay. So that's right, Trudy. You just got to follow the orders. You know, I tell everybody this. What are we? You know what we are? We're the ants on the floor. Okay? All we're trying to do is get the crumbs so we could eat. We're not moving tens of hundreds of thousands of shares. Right? Are you? I know I'm not. So the thing is, why are you going to try to analyze the stock? Why don't you just follow the money? Be an FBI agent, be a detective, follow the money. It's all you have to do. And that will give you your game plan, where to get in and where to get out. You see, like, here's an example. A major resistance level is here at $5, right? There you are. It's $5. You can't miss it. Point blank. You don't need to be a rocket scientist, you know, and actually I am teaching one, you know, no disrespect, I know he's logged in here. I have a rocket scientist from NASA that is taking my class. But the thing is, You don't have to. You don't have to be there and analyze and be a super chart reader. You could see it clear as day, a major resistance level at $5. But is it the chart that's really making it resistance, or is the 14,000 share seller at $5 and the 13,000 share seller at 510 and the 6,000 share seller at 505? You add that up. What are you talking? Almost 35, 40,000 shares, right? What is that compared to the 200, 400, 300 on the bid? I mean, well, you got a buyer over here for 8,000. Doesn't even come close to the 35,000 on the offer. It's clear as day. It makes perfect sense why that's a resistance levels. Carl says, I'm a former rocket scientist. All right, so with that said, ladies and gentlemen, the thing is this. Here's another clear example, okay? You see the high of the stock right there? 16.34. You see, here you have a stock. You bought the stock. It's at $16. It goes all the way to 16.34. Why did it go down to 16.34? There's no indication on a chart that explained it, okay? You can look at the wicks. You can look at the candle. What is the main reason? I'll tell you what the main reason. There was a 10,000 share seller at 16.35. And until that guy got out of the way, it's not going anywhere. So you could think all you want, ladies and gentlemen. That stock is not gonna break it. And if you didn't see that order out there, look where the stock is right now, 16.23. So you just threw away an additional 11 cents. Now you might scratch your head like, what the hell's 11 cents? I'll tell you what 11 cents is. On 1,000 shares, it's $110 in what? 5 minutes? Hey, if you're willing to give up $110 5 minutes, listen, I'll be on that line all day long. Okay, that's the way you have to look at it. Jim, you can't. Jim, let me ask you a question, Jim. Jim, do you have level 3? Yes or no? Because Jim's question is, can't you hide the huge sell orders like you can in level 2? Jim, if you listen to what I told you, level 2 only shows you 1/20th of the orders. It doesn't show you. So there you go, Jim. So I guess you're going to be joining me next week to see it live in the market, because I can't show you now. The market's closed. So that's the only way you're going to be able to prove it to you. Okay? Cheat says, Jim says, yeah, baby. There you go. Okay. Chad is saying, where and how much is cost level 3 to get paid for it? It's cheap. Okay? It's peanuts. At the end of the day, if you're buying a 6-figure salary, okay, and if you got to lay out $20, $100, does it matter what it costs? You see? So I could just tell you this. It's not a lot. I used to pay $2,000 a month for it, but it's cheap. It's like, $10, $20, okay, for that data, which comes direct from the exchange. Now, just understand something. We're not a software company. We're a school. So keep that in mind. Okay? We just teach you the tools. Now, any questions about high-frequency trades? Because that's basically a high-frequency trade order. Sam says, I can't wait to next week. Show me the money. Well, Sam, listen. You got to learn before you can earn. And remember one thing, Sam. The stock market's not going out of business. All right? When you and I die, it'll still be here. So just be patient with us, and we'll show you how to do it. Let me tell you, and Sam, as excited as you are, that's what it was like me when I first started. And I blew up. I blew up a $100,000 account. And I'm like, what the hell did I do? I thought it was just easy to hit the buy and sell button and read the Wall Street Journal. It didn't really work out too well. Can my broker and my account give you level 3? Only certain ones. Not all of them. They won't tell you they have it. They don't want you. You got to understand something. Brokerage firms trade against you. They want to tell you if they have orders out there. They don't want to do that. All right. So anyway, let's move on because we're running out of time. I got about 10 minutes. 15 minutes, and then Tom Busby's coming on. So let me go. I got some other good stuff to tell you. Next biggest thing people want to know is, Fausto, where do you find these stocks? Everybody's looking for that crystal ball. Well, you know what? It's not that hard to find stocks, okay? This is what I do, and this is what I teach my students what to do. We go through a top 20 list. We look for percentage gainers and losers, okay, and specifically stocks that are moving in the market that are very, very active. And then we look for stocks that are up 20, 30, 50%, and we just run with them, okay? Why they're up, you know what? I don't know. I don't care. Listen, the Ebola stocks. Everybody saw the Ebola stocks? You know, those stocks went up 400% in like 4 or 5 days, you know, and you had a month to jump in them. They went from $1 to $32. I didn't know they had anything to do with Ebola, you know, until, you know, a week later. All I know, I kept on knowing, it kept popping up on my big percentage gainers and losers list. Okay, now, you know, it's a catastrophe, you know, what happened. But at the end of the day, you think that's going to stop a company like DJLY selling rubber suits where they make all their money? How about now? What's going on right now? What's the big news in the news today? Okay, the big news is about the cop killing, you know, of these, you know, and I feel bad for these black kids that lost their lives. Okay, well, what's happening? So how does that affect the stock market? Well, Taser is, you know, is going up huge. You know, there's these stocks that, exactly, David. There you go. So, you know, why you can't capitalize on a stock that's going to be probably going to be get a huge contract? Because now, and what about the cameras? Now they want cops having cameras. What? Now you can't benefit from it? That's what trading is all about. Listen, something that affects us every day is what? Oil, gas, right? You as a consumer are flipping out because now you're excited because you're probably putting $10 in gas because you're waiting to get, because the oil is tanking. Why? You couldn't short the oil stock? You couldn't benefit from that? Why you got to think as a consumer? You can't go out there and think as a trader? Because that's what we are, ladies and gentlemen. That's why you're here. You're here to be traders. You're not here to be investors. You want to go invest, go give it to a mutual fund and make 5-10% a year. That's not what we're about. We're about making 5-10% a day. That's what these guys are doing. Remember, I live here in New York. The big thing about New York is the Hamptons. This is how I got overwhelmed with the market. How the hell these guys go out there and rent a house for 3 months for $1 million? What are they doing that I'm not doing? They're traders. And that's why we're here. So finding these stocks, ladies and gentlemen, not that hard. You know, here we run a Twitter feed. We run a professional trading room. It's online. You know, I'll give you a couple examples. You know, Virgin America went public. Why did the stock go up? It's not because it went public. It's not because Alan's saying, you know, Alan talking about JetBlue. They went up because oil got tanked. 70% of the ticket price is towards paying for fuel. This is one of the reasons why they're taking off. So even though if you couldn't short oil, you could have bought airline stocks. They all went up. Sun, a solar stock. Look at these stocks, how they go up. In one day, this stock went from $18 to $21 in a matter of an hour. Who doesn't want that job? Think about it, how much money potentially you could make there. PLNR, anyone hear about it? PLNR, we were watching the stock in the pre-market. It went from $5 to $7, up 75% today. What the hell does PLNR does? Who the hell cares? Okay, I can tell you this, Apple was never up 75% in one day, and it's not $4. You see, we're traders, ladies and gentlemen. Now, why was this stock up? Who, you know, what's going on? The thing is, you know, why they're taking off? Whatever it may be, we follow the high-frequency trades, we follow supply and demand, and we go with that. GNW, another big winner, okay? Genworth Financial, great short, right in the pre-market. This is what we do. We find these stocks in the pre-market around 8:30. You could have shorted in the pre-market. Even if you got at the open and went from 10 all the way down to 8, not bad for a day's pay on the short side. That's right, G. Who cares why it's down? It's not your problem. Your problem is your problem is that you didn't get it. Okay? But guess what? They're there every day, so that all that matters. All right. So, potential income. You know, 1,000 shares of a stock moves 50 cents. It's $500 a day. It's 20 trading days in a month. You're talking a six-figure salary. How many of you here wake up in the morning and trade the market and says, you know what, I'm looking to make 50 cents? People are like, what the hell's 50 cents? Yeah, well, you know what? Trade 1,000 shares of stock. It's a lot, okay? You don't got to do it with Apple. You don't got to do it with Chipotle. You don't have to do it with Cisco. There are other stocks out there you could find it. And when you deal with less expensive stocks, you're dealing with less experienced traders, and you're not dealing with the rest of the world out there. This is what I've learned. You know, one big mistake that my mentor taught me, he says, Fausto, why in the hell are you trading the top 10 stocks that trade in the market? There are 25,000 stocks out there. You want to risk the least amount of money with the high amount of reward. Why are you dealing with these stocks? Just make your days pay and live a great life. That's what trading is all about. So the thing is this, everybody. Every single one of you here need a mentor, and don't you forget it. It might not be me. Maybe you don't like me. Maybe you don't like the way I dress. Like, you know, Norman Howell's bragging how I dress. Whatever it may be, maybe you don't like my voice. Maybe you don't like day trading. But I'm just telling you this. If you're looking to do stocks, options, forex, futures, you know, everybody we brought here to the table, we feel that this is an interview, and every one of you here needs to learn from one of them. Okay? And you can learn something from all of us. But please do not go out there and try to learn this on your own. It's a 70% failure rate. You're almost guaranteed to lose. If a doctor came up to you and you know, like think about it. Would you give your money to a financial analyst and then went to school to learn how to trade? You just open up a storefront? You wouldn't do it. Well, that's what you're doing. So learn from a mentor. It's the cheapest trade you could make. Okay? Now, for myself, ladies and gentlemen, if you want to follow me, Twitter, YouTube, Facebook, we tweet our trades. I got thousands of videos. We've been in business for 20 years. We're the oldest school running. Well, there's like one or two schools that were trading back when I started, which, you know, gives you a lot of credibility. If we're still around, obviously that means something. I've trained hundreds of thousands of people, you know, over the years. So if you want to get that data and you want to learn a little bit about it, you're more than happy to visit any of those sites. Now, how could you start learning today? Very simple. Okay. First of all, Cybertrade University does education for some of the biggest brokerage firms in the industry: FXCM, Thinkorswim, TradeStation, TradeMonster. If you go on their websites, you'll find some recordings. You'll find hundreds of recordings throughout the internet. I've done speakings for all of them. You got to remember, these brokerage firms, they want you to learn how to trade. That's what they want you to do. They can't teach you. And you don't want them to teach you. You need a third party, and that's why they come to us. Now, also, some of you logged in late. I'm a 12-time champion. Also, we were ranked #1 school by Equities Magazine. Actually, for some of you here, I'm going to be ringing the closing bell with Equities Magazine on December 18th. So if anybody wants to, you know, like I said, we're also throwing a big event at the NASDAQ Center. Visit our website at Cybertrade University. You're all welcome to come. It's a free event, but you got to register for it. Now, how can we become a better trader? Okay, I got this great offer I'm going to give everybody. There's a lot of very inexpensive products, but I know some of you here really want to learn how to do this right. Well, we got a Jumpstart Gold course that I'm offering. It's $797. You know, I know it's a lot more than what most people are offering, but you know what? You're going to get 1 month of my cyber group. You're going to get all our workshops. This is a $3,000 package, okay? We do it only once a year. It's our biggest, most popular package that we sell, and we only do it in December, okay? So it's $797. It's 3 days of me personally teaching you everything that you've learned, and you get 1 month of my training room. So you get everything that I teach, you know, in a Jumpstart course that's going to teach you how to trade. Now, if you don't register before Monday, it's $997. Class starts on Wednesday, Thursday, Friday. It's 3 full days, okay? So if you're interested, you're going to be learning how to find stocks. You're going to get the ECN book. You're going to get time and sales workshop, entries and exits, pre-market trading. It's going to be live with me personally. So it's a very, very in-depth workshop. It's going to be recorded. You're going to keep it forever. So if anybody wants to register for it, just feel free to go there at cybertradeuniversity.com. I'll give you guys the link. You can call right now at 877-70-CYBER, and actually the first 10 people that register, I'm going to throw you my book in also. So if anybody calls in right now or registers online, the first 10 people, I'm going to give you a copy of my book. The link, let me just give you the link for it. I know a few of you are looking for the link. Now, does anyone have any questions before Tom Busby comes in? I know everyone's still any questions I could answer? Yes, let me give you the link right now. I'm just trying to find it. I got 6 monitors, and I got a ton of things that I'm clicking on. All right, let me just, the spectacular event. These are two events that we're giving. There we go. Yes, we're going to teach you how to scan everybody. Absolutely. That's all going to be covered in that class. And we're going to show you where to get level 3, where to find it, how to use it, everything. It takes time to learn it. Everyone's got to understand something. I only have an hour to kind of give you a little crash course of what you're going to learn. So basically, you took a crash course you're going to learn in 3 full days. Now, there are a lot of questions that came across here, so if anyone wants to copy and paste. What if you're not in a position to trade, John? John, listen, that's a great question. No one here is in position to trade. You're in a position to learn first, and then we'll learn how to trade, okay? Don't worry about if you're not in a position as a maybe you're not financial. Let's learn, because the stock market's not going out of business. So if you learn now, you can use it eventually. Is the class recorded, Rosa? Yes, it is. Absolutely. Vita, if something popped up on our website, that means that probably the online chat came up that you could network to one of our students, one of our education advisors. The classes are live, and they're going to be online. You don't have to come to New York and take the class. It's cheaper, it's more cost effective, and also the recordings are much better. All right, any other questions? Sophie, you bought the package yesterday from Josh. Have not received confirmation. Well, actually, we just launched it this morning, Sophie. But I know you did purchase it, and I appreciate your thank you for buying it. And I look forward to teaching you. But you're going to have everything on Monday morning, okay? So, Sunday night, 12 o'clock. On first thing Monday, it automatically is a time clock. It automatically raises it $200 to $997. Now, if you're a gold student or a silver student, let us know. Do you know does TOS offer things? No, it doesn't, Izzy, but you can get it. It's a great platform, Thinkorswim. But the beautiful thing about that platform, I'll show you where to buy it. And you just use it as a secondary execution. You got to remember, Izzy, that's a free execution system, and the brokerage firms can't give you, they would have to pay out of their pocket, and they don't want to do that. What kind of size account you need, Dan? You don't need a big account, not at all. People, that's a misconception. Look at it. There's stocks I trade, $10, $20, $5. How much money do you need? You don't need a lot of money to do it. NinjaTrader doesn't offer it, but it's a great platform, and we can tell you where. And once again, in class, we'll show you next week when the market's open. We'll show you where to get it from there. Yes, Neil. If you take a course with CyberTrade University, they will give you 20% on all your tickets, and that also goes with TradeStation. But if you take our course, we'll let them know, and they'll give you a discount on all your tickets. Does Warren have level 3? I would think so. We don't do business with Interactive Brokers. Don't know too much about their platform, but from what I was told, they don't offer it. No problem. Easy. Thank you very much. All right, guys, listen, I'm going to take a quick break. I'm going to give you 5 minutes to go to that package and register online if anyone's interested. And then we're going to have Tom Busby come up, and then we're going to be giving away our trading computer. So everyone just stand by, and we'll be getting back, okay? For everyone, once again, thank you for coming and listening in, but we're not done. We still got 2 great speakers that are coming in. Remember, if you log out, you can't log back in because we only have 1,000 people allowed in, and it's we look like we maxed out already. So don't be leaving. So don't go anywhere. In the meantime, register online for that, and you could register also for the option class that's on top of it. And if you want to know more, there are other packages that we do offer at cybertradeuniversity.com. So feel free to register for the cyber group or the book, whatever it is, okay? In the meantime, everyone will be right back. Don't go anywhere. All right, guys. Before we bring in our next presenter, just want to let everybody know we're going to have to close the room down, and you have to log back in. So I apologize for the inconvenience, but we capped out our list. So we have to log everybody out. And we have to log back into the room. So the room's going to shut down. When the room shuts down, just go back to your login, and we're going to get you right back, and you can log right back in again. Okay, so everyone's not going to have a problem. All right. So just stand by. You're going to be booted out, and then just log back into the room.